When we enter in the market, the anticipation is the market to hit our target and take profit. But what do you do and what shows the market that will not continue in your chosen direction? Welcome to the Trading Focus once again. Hope everyone is doing good. In today's video, we are showing you the signs that the market will move against your direction and hit your stop loss, and what to do when you against into the when we enter when we enter in the market, the anticipation is the market to hit our target and take profit. But what do you do and what shows the market that will not continue in your chosen direction? Welcome to the Trading Focus once again. Hope everyone is doing good. In today's video, we are showing you the signs that the market will move against your direction and hit your stop loss, and what to do when you see that. Give us a favor, subscribe on the channel, leave the comment below, like the video, and I will see you in the minutes on an amazing today's video. Okay, welcome back traders. So when you are in the market, okay, you entered in the market, you have to make sure that you know the sign when the market moves against your direction, you have to close and secure some profit or even close less than you expected to lose. So we are going to see those characters that are going to be showing in the market that the market is going to hit your stop loss. So now we have the market that was moving up from this low. Okay, you can see here. So we have made a high by breaking this previous high. So to someone who enter from breakout and retest, we'll be entering from this area by taking a buy from this area. Okay, long position, entry from this area, anticipating the continuation of the trend. So now what happened is the market start consolidating. So the problem is not about consolidating. We entered from better areas. So we are consolidating from the high to the low. How many times are we rejecting from this area? So we are rejecting from the low, yes, but we are also rejecting from the high. We took a trade, okay? When we take a trade, let's say we are in the uptrend. So if you enter from this area, you are expecting the market to go for the higher high. Let's say we entered from here, long position from this area. So you are expecting the market even start breaking this structure as an uptrend continuation. You are expecting the market to break here and continue at the higher high. Then the market is now consolidating by rejecting from this area. So what to do this time? The market consolidating from this area, there is a reason why. Because we have this area which is imbalanced from demand area. As you see, you entered from better entries, you're expecting the market to move up. But if we start consolidating like this, you start looking for how are we rejecting from the high, okay? How are we forming the candlesticks? We are going to take a look from the candlesticks on the chart. So then after consolidating, this is a sign that there is a problem. Why are we not continue in the upside? We have to make sure that we have to get out from this market. So you entered from this. You failed to make a high. as long as you are failing to create the higher high when you are from this area. So let's now move to the chart and see how can we take that opportunity to get out of the market and wait for better entries. Okay, now from the chart here we have the market that is moving up. Okay, we have this area left as a demand zone, you can see. Then we are moving upside by making higher high to the higher. And the target will be from this area. This is where the target is. We are expecting the market to be this area. So we have to make sure that the market is making higher high by breaking this previous high. So we need to continue like this by creating higher high, maybe to the higher low, to continue with this target. So we need to see if we can get that opportunity, or we are going to see some signs that the market is going to change the direction against our decision. So now we have to make sure that we see everything, candlestick characters that are going to be changing, and even how the price is consolidating from this area. So now let's see what happened. Okay, we are moving down, moving up. Okay, let's see what happened. Consolidating. We are still creating liquidity from this area. Can we continue in the upside? Okay, also someone who wants to enter from this area will be entering from there. So we need to make a higher high, not rejecting from these areas. Okay, let's see what happened. Remember, we have this area which is a demand. We are in the trend continuation. Let's see what happened. So rejecting from the high by creating an equal high. This is a TP1. Okay, so let's see what happened. We moved up by making a little higher high, and we started rejecting from there. Can we stay above these areas? Let's see what happened. No, we rejected from there, moving down. Someone also will be waiting from entering this area by expecting a buying opportunity. Let's see what happened. Okay, now waiting for a bullish candlestick to enter, rejecting from the downside. Then someone will enter from this area, okay, taking a buy by anticipating the market to continue in the upside, stop loss below the previous lows. Okay, you're expecting the market to continue in the upside. Let's see if your decision is going to be right. Okay, here we have been in the profit from this area. You didn't close the market, and then the market moved down from where you entered from. So let's see what happened, if it's going to be your winning trade. Moving up, also rejecting from this area. That's what I was talking about. You are rejecting from supply areas. You can see from here. This is the sign that you have to get out of the market. There is a high probability that the market is going to change the direction and make a balance from this area. That's where you have to make sure that you are getting out of the market. So if you stay there, what are you gonna do? From this area, you have to wait for the chance to at least not breaking below this area. If you want to lock some profit, you have to lock from below this area, this red line. Okay, this will be your locking position or break even. So now let's see, if we break below this area, we are going to close. If you see this candlestick rejecting from the high with the strong volume, that is the sign that we are failing to break above this area. We were expecting to make a high from this area, then we are failing. So now we have to make sure that we are getting out of the market. You have to close your position. Let's see. Now we are moving down. Okay, let's see again, equal lows, moving down. So also we are out of the market. Then let's see what happened. Okay, we are moving up. This is a sign that as long as we are still rejecting from this area, there is a very high probability for the market to move down and balance this area. Remember, this area is imbalance. Okay, we tried to move down, but we didn't touch on this area. So we are waiting for any kind of retracement from this area so that we can buy from here. That's where we set a buy limit from. Okay, stop loss below the previous low. Our target will be from these areas. Okay, let's see what happened now. So remember, have you seen these signs you are out of the market, close your positions and wait for the better opportunities, because we are failing to break above these areas multiple times from the high. We are expecting to create a higher high and continue with the higher high, but there is a reason why we are still struggling to break above this area. So now let's see what happened. Moving down, as you can see, rejecting from the high again. See, now we moved up. So as long as we are moving up, we need to break even above this area, this one, this. So if we don't break above this area, there's no any higher high we are waiting for. So if we break above this area, we are going to see if we can enter from the down areas here. Okay, let's see what happened. So rejected from the high, we moved down, so there's no higher high. And then let's see what happened. We are still rejecting from the high. Let's see, equal high again, rejecting from this area. With the candlesticks also I was talking about, we are now failing to break and close above this line, which is the last high, this black line. This was the last high. This is a fake out. This is a fake out. Now we are rejecting from the stronger selling opportunity, which creates these shadows. So can we stay below? If we stay below, this is a sign that there is a high probability of the market moving down from the demand area where we are waiting from to take a buy. Okay, let's see what happened. We are still rejecting from this area with the long shadow on the tops. Okay, moving down. Moving down, now you can see we are moving down. Let's see, we can get to our entries. Okay, moving down. Let's see what happened. Up, consolidation. So now we have activated our entry. Can we continue in the upside? So here, as long as we are going to hold this trade, you have to make sure that also these areas we can make an equal low from here. That's why my stop loss will be from this area. So you have to avoid entering in the market and then the market will kick you out, then still move in your direction. Let's see what happened. So now we are in the good position, rejecting from the low. Can we continue in the upside? Let's see what happened now. If we can get to our target, we are in the profit now, still moving up. Okay, so we started making higher highs from this area. So looks like that we are going to hit our target. Let's see what happened. Consolidating again, the same way that we consolidated from this area. You have to make sure that you know the characters of some currency pairs. This liquidity is the same as what is happening. You see, now we are creating higher high to the higher low, consolidating also again from this area, lows from these areas, moving up. Let's see what happened. Okay, you Can see we are struggling to move up. Then we activated from these areas. Then we continued upside. Let's see if we can get to our target. Okay, let's see. Okay, now we go to our target. Well, by entering from beta entries. So that is the way of entering from the beta entries, and that is the way of deciding in the market to get out of the market from weak entries. So you have to see these characters and you stay away from the trade, or if you entered before, you have to make sure that you see those signs and then you get out of the market. Instead of losing much, you can lose less than you expected to lose, and even you have to secure some profits as long as you're seeing this rejection. So from this area securing the first TP1, and from entry here, as long as you're rejecting from this area, you have to close your position. So guys, thank you so much for your time. Until next time, take care. Remember, subscribe on the channel, leave the comment below, and like the video. I will see you next time in another subject. Ciao. Making money in the market is based on decisions, and those decisions are focusing on maximizing the profit and minimize the losses. Welcome to the Trading Focus once again. Hope everyone is doing good. In today's video, we are going to show you how can you enter from strong entries and where can you get out of the market when you see some signs that showing you that the market is going to change the direction against your decision, so that you can get out of the market before the market hit your stop loss or closing and secure some profits. That sounds amazing, guys. Give us a favor, subscribe on the channel, leave the comment below, like the video, and I will see you in the minutes on an amazing today's video. Okay, welcome back. So guys, in the market, when we are taking decision of buying and selling, the purpose is to make profit. So the time when you are in the market, you need to maximize the profit and minimize the losses. You can even also be consistency in the market with the very high winning rate, but your decisions have to be based on the rules. So by trading what you see, not what you hope. Let's talk about this movement from GJ. We predicted this currency pair from the start of January this year. So we have been moving up. So we are going to take a look on how can you make sure that you have to close the order when you are in the danger areas. Which information are you waiting for to leave the market or to stay in the market? Where are the better entries we are going to be taking from this price action? So now the market was moving up. As you can see, we're in the uptrend. There's no doubt on that. So then we were expecting the pullbacks from these areas to make the balance from this area. And if we continue moving down, we're expecting also to be buying from this area. This is a higher time frame. This is a daily time frame. So now the target was from at least this area. Remember from our previous videos, we have even the higher target than this one. You can check from weekly time frame. So now let's target this area. Where are we supposed to be entering is from this area and this area. So now that's how we predicted the market to continue upside. So we are going to take a look on some examples on how did we enter from this market and how did we close some profits and how did we close some small losses and which characters did we see in the market so made us to close those orders. Here we moved down, rejected from this area, so where you can start looking for buy. This is a demand area, and even this low, we have to move to the lower time frame so that you can buy from there. So I want to see where did we start to buy from. Okay, let's see what happened. We moved down, okay, breaking, making an equal low from that area. You have to buy from that area. Moving up, okay, down again, so multiple times. So even now we reacted from internal area from this side, from here, where I think we are now moving up. So let's take an examples and see what happened. Okay, we are from the areas of reversals. Even if we are in the uptrend from the higher time frame, we had a deep pullback from this area, from here, so that we are expecting the market to continue in the upside. So now, when we are moving up, we are creating higher highs and higher low. You remember that. So from those higher highs and higher lows, sometimes the market will be moving by not creating the balance area. So we have to wait until the market make a pullback to balance those areas so that we can buy from there, and then we continue with the trend, or we reverse with the trend. So that's why we had to wait from this area that I'm going to be talking about. From here, the market was moving up. This is a sign of a reversal. So by moving up, we have to wait from these areas, okay, so that we can continue move in the upside direction. Then what happened, what we are seeing here, we have an equal lows. This is the low, and this is another low. So the market made a low to the lower high, to the lower low, because we broke the previous low, to the lower high in general, sweeping this liquidity, low to the high, to the low, the high. So to someone who believes in chart patterns, we be seeing this as a neckline, waiting from this area so that you can buy from this area. But remember, the stop loss is still from this low, below these lows. So someone who is waiting to buy from better entries, this is our entire area we are going to be waiting from to buy this market. So now what happened? The market decided to move up, okay? Moving up, we have to wait until we get that retracement from these areas so that we can continue with the market, okay? So still moving up. So we have this area, and we have also internal areas. To someone who trade break and retest, we be buying from this area, and even before should be waiting from even this area. So we need to make sure that we can see this one plus this. If we reject from this area, will be an equal low from here, from this pullback, but our focus is this area. So let's see what happened. Moving up, moving down. Okay, someone will be waiting from this area, but we need to buy from strong area so that we can move with the trend. Where are we rejecting? We are rejecting from this area. That's why I will not buy from this area. I'm waiting for a strong pullback from the downside so that we can move with the trend. Reaction. You have to be patient and wait for the market, okay? We start making a reaction from that area, breaking below this area. The next area that we are looking for will be this one. Okay, reaction from that area. Can we move up? No, we are still moving down. Reaction, making an equal low, rejecting from this area. It's moving up. So here, this is what we have to say. As long as the market is trying to make a reaction from the previous lows, which are not stronger, Do not enter in the market by expecting that we continue in the upside. If you entered from this area with the confirmation from this area, this is a break and retest, so we left this area as a better area. So if we entered from this area, remember your target will be this area at least, so that we are waiting for the market to make a pullback to this area as a what? As a continuation over a deep pullback. This will be the last target. To someone who waiting to buy from this area, I'll be waiting for better entry so that I can make more money. Okay, let's see what happened. The reaction from that area. So here, I will be waiting for a touch from this area. I will not enter the market until I get a reaction with the bullish candlesticks from this area. So where I can set my buy limit, remember, from this area, my stop loss is below the previous low. From this entire low, I'm expecting the market to continue to change the direction to the upside. Let's see if we can get a reaction. Consolidation now. So as you can see, we are so close to touch from the down area, this area. So as we are creating liquidity, let's see what happened here. The market is trying to move up from beginners. We'll be entering from there, expecting that the market is going to move up. So when you set a stop loss from these areas, let's see if you can survive. This is a sign that I will be waiting for the market until we get the confirmation from this area so that you can make a safe money. Okay, let's see. Still consolidating. So you can see now we are trying to move up and rejecting from this area. So let's see if we can still move up or we are going to move down so that we can activate our buy limit. That is the creation, or this entire movement is a consolidation and this is a liquidity. Now we activated our buy limit. Now we are in the trade. The stop loss, remember, is below the previous low. So now we are going to move up. You can see, that's why I like to tell people that you have to make sure that you focus on few pairs when you are trading. As long as you know the personality of that pair, it will be easy for you to make sure that you are entering from better entries. So now you can see what we know about GBP Japanese yen. This is the movement we can get from that pair. So let's see if we can move up so that we can get to our target, or where are we going to be entering for the next movement. We are moving up, so we left this area which is imbalance. We have this area as a demand area. We have some internal areas to buy from this area. So let's see, we have to make sure that we can set a buy limit again from this area by anticipating the market to move up. Moving up, the action from that area. I'm not going to enter from that area. So you remember these consolidations. The liquidity we created from this area is the same that we are creating from this area. So now we are moving up. Let's see if we can continue. If we continue, it's okay. I will be in the trade, but I have to wait until if I get this opportunity also from the downside, I will be taking a buy also from this area. Moving down now. So as we are moving down, where are we buying from? We have two areas. We have the first one from this area. We have also this area. This is an equal lows. I don't want the market to make other equal lows for creating other liquidity from this area. I need the market to make a low from here so that we can continue in the upside. Let's see what is going to happen. Moving down, so reaction from this area. Let's see what happened. Can we enter? Yes. What I wanted to talk about is what you are going to see from this entry that I'm going to take. So I will let you know how am I going to be leaving this trade if I see some reaction that I'm going to be showing you. Consolidation, moving down, I'm out of the trade. Okay, so let's see what happened. Am I going to enter again from this trade? Let's see. Okay, we have an head and shoulder. Hello. So we created a neckline from that area, and we even have in general a demand zone from this area. If we make a high to the low, we are going to continue with the higher high. So let's see what happened. Consolidation again, no entry, we are not moving up. Consolidation. Okay, guys, remember from this area we have been consolidating. We moved up and we moved down. We didn't get better entries to continue in the upside. From even this area, we are waiting from this area down here from the demand zone. So then after the market consolidated for very long, and we created liquidity from this area, the same as here, the same as what we are seeing from this area. That's why I will not enter from this trade until the market make a move down to balance this area, because now I see more equal lows. Why are we not moving up? You have to make sure that you leave this market if you entered from this area. Okay, this consolidation is not for peace. Remember, we have this buy limit from this area, reacted from this area. Now I will enter with this reaction because we touched it from this area. So now this is an entry. The stop loss will be below the previous low. Then now I'm expecting the market to continue in the upside. The stop loss is below the previous low. This low here, anticipating the uptrend continuation. Okay, we are moving up now. So where are we going to be waiting to buy from for the next time? We are going to be waiting from this area, this one, okay, and even we have internal area to buy from, this one. So let's see what happened. Better entry will be from this area. Activated this area, so this area is not strong enough. When you want to buy from this area, how can you decide if you are going to stay in the market or leave the market? So entering from this area, the stop loss is from this area. The target now will be at least from these areas here, which is very, let's see, at least here, which is very risky. Stop loss is from this area. Let's see what happened. Okay, moving up, we got to our target, which is better. So I need the reaction from the downside area, from this area, so that we can continue upside. Reaction, we got a reaction, yes. Can we enter again? The answer is yes. Let's enter from here. But still we have to be careful because we have an imbalanced area from downside. Okay, the target is still from the same area. My stop loss this time will be here. Okay, let's see what happened. Okay, consolidation. So aggressive as we are seeing this consolidation. So this is where you have to get out of the market. As you are consolidating, you were expecting to enter from this area and the market to continue in the upside, and then now the market is trying to move down, and even we can see that we are out of the trade. So this consolidation means that you have to make sure that you are getting out of the market. The time you should have been closed is from when you started seeing this reaction from this area, which was from upside here. So you have to close from right over here without hitting your stop loss. So now let's see what happened and get to our entry. This will be our entry. Okay, we are still moving, so we are still reacting from that area, and that's where the market is now. Okay, so this was from Monday. So we were expecting to buy from this area, and then what happened is the same as what I was trying to explain. So you can see from this area we reacted, but we moved up. We are still consolidating from this area. This is a liquidity. Very strong area we have to wait from now is the down this area here. So that's where now you can see the market is trying to move down, and we focus from this area to buy from this area, anticipating the market to continue in the upside. This is GJ. So this is also now the prediction that we are looking for from next week. So this liquidity is the same as this one, the same as this one. Okay, you can see where, and the same the previous very strong liquidity from this area where we moved down, and then we started creating liquidity from this area, this one, until we activated our order. Then we moved up, liquidity again, we moved up, down, liquidity, we moved down, activated our order. So that's what we are waiting for from this area. Okay, you can see here we are moving up, consolidation, moving down, liquidity. So we need down and uptrend continuation. So that's what we are focusing on from GJ. We are still in the uptrend, remember. So we are still expecting the market to continue in the uptrend. Okay guys, thank you so much for your time. Remember to subscribe on the channel, leave the comment below, like the video, and I will see you next time. Be safe. These are the best entries with this chart pattern with the professional traders. Welcome to the Trading Focus once again. Hope everyone is doing good. In today's video, we are teaching you the perfect way to master these entries from the equal lows in the trend continuation and a reversal areas. That sounds amazing, guy. Subscribe on the channel, like the video, leave the comment below, and I will see you in a minute on today's video. Okay guys, welcome back. So starting by entering from this opportunity from this chart pattern, the chart pattern that we are talking about is a reversal chart pattern, is a bullish reversal chart pattern. That is a double bottoms. Remember, in our previous video, we explained in general the chart patterns and where are they signaling the direction of the market. So now let's talk about the double bottoms. By understanding the way of the price move, you will understand where to enter from the double bottoms and where can you set a stop loss in a reversal and even in the trend continuation. So what is the double bottoms? Double bottoms will appear or will be formed when the price is moving down. We are in the downtrend, as you can see. Okay, when we are in the downtrend, we end up rejecting from the low, remember, from the areas of bullish reversals, where we are rejecting from by forming the first bottom and even forming the second bottom, which names as the double bottoms. This is a bullish reversal chart pattern. Okay, remember, when I'm talking about the change of the direction of the market or a reversal, you have to be careful with the rejections. you have to make sure that you are rejecting from the strong area. That is areas of reversal. We are rejecting from support areas where we are supposed to be starting an uptrend from. So you have to make sure that you start from the higher time frame, like daily time frame. Where are we reacting from before the current market? So remember, you have to make sure that where we are rejecting is where the first movement uptrend started from. So remember, the history repeats itself in the market. If we had this movement from the down and we get another one from this area, this is the strong signal that we are going to be reversing to the upside. The history repeats itself as we moved up before from this area is the same formation that we are expecting from this area also. So the area of reversals have to be stronger. So bullish areas of reversal, we are rejecting from the area which has been also rejected before multiple times by changing the direction to the upside. So this formation of the double bottom showing that the sellers try to push the market down, but we end up failing to push the market down. The sellers rejecting from this area where we started creating the double bottoms. So now we have two bottoms, we have also a neckline. Remember, you can call this one a high, which is a resistance. This neckline is where we are going to be looking for buying from break and retest. So we have two ways to enter from this chart pattern. You have to make sure that in general, the better way to enter from this chart pattern is to wait for the market making a low by trading from the demand area, breaking above from this area, make a retracement from this area, or make a low before we start making a higher high. So remember, what I'm trying to explain here, as long as the market breaking the previous high, you are making higher high, okay? When you are making higher high, we are waiting for the higher low. Any higher low doesn't necessarily have to be making a retracement from the neckline. The higher low from the previous lows, is very important, where you can enter by risking less than you are supposed to be risking from break and retest. I'm going to talk about that in a minute, okay? If you enter from this area, you're going to be entering from here. The stop loss has to be below the previous low. This is the way of entering from the what? From demand zone. Now, the way we are trying to enter from this area, we reduce the stop loss. The stop loss will be small, okay? The second way to enter from this chart pattern is to wait for the market. Also explain this. Wait for the market break out and make a retracement from the previous high, which is a neckline and which is also a resistance. This retracement will be a higher low, which creates a support where we buy from. So this time, remember, when we are trading double bottoms or double tops, we have to set a stop loss. If we entered from higher low, retracement from the neckline, the stop loss has to be a half of the formation of a double bottom, which is a risk area. Where the market is not balanced, if we break down from this area to someone waiting from the demand zone, we'll be making money. When someone who waiting from there break out and retest, will be losing from this area. So you have to make sure that the market is balanced, where from the double bottom, you have to buy from the demand area. So entering from this area will be safe, and even the stop loss will be so small and the target will be bigger compared to the one from the break and retest. So someone who trade breaks out just only will be waiting for the candlestick to break and close above the neckline so that you can go ahead and enter from this area by anticipating the market to even move and target at least the distance which will be the same as the formation of the double bottoms, which is not a good idea to trade this chart pattern with just breakout. You have to wait for the higher high to the higher low so that you can enter from the higher low from stronger area, which is a demand area. Okay, so now we are talking about the change of the direction of the market, a bullish reversal. Okay, what about in the trend continuation? Remember, in our previous video, we talked about the different types of chart patterns: reversal, neutral, and even the continuation. Those reversal chart patterns are also used in the trend continuation. So now let's see, can we get a double bottom from the trend continuation? The answer is yes. Don't make any confusion from this. If you see it, you have to make sure that how can you enter from that opportunity. So we have the market that is moving up from this area. We are making higher highs and higher lows. Okay, now what I'm talking about from this area, from this trend, we are in the uptrend. So we have a high, we created a high to the higher low. This is a higher low to the higher high to the higher low by continue with the higher high. So from the higher low, in the higher low, we created the double bottoms from this area in the trend continuation. We are making a retracement from this area from the previous high, which is our resistance. So if we have two in general, this is a higher low, but we have two lows which will be equal to equal lows. So this is a low and we have two lows. Okay, this is another low which will be an equal lows, where we can get an opportunity of buying from that area, which is forming a double bottom in the trend continuation. So when you see that, how can you enter from there? So the scenario, the way we enter from this one is the same. Someone will be waiting to trade to enter from the breakout and make a retracement from this area. But as I've been talking about, we are in the trend continuation. Make sure that we are buying from the higher low, which this one will be a demand zone, okay, where we are going to be taking a buy from. So it's better to enter from that area so that you are going to be minimizing your stop loss. Okay, taking a buy from this area, the stop loss will be below the double bottoms, anticipating the market to continue in the upside. That is the way of entering in the double bottoms in the uptrend. Okay, so we have another way with the formation of a double bottom. So this was a neckline, we didn't talk about that. Okay, so from here we are creating higher highs, higher lows, and higher highs. So we have a retracement from this area, from the high, where resistance turned into support. We are buying from this area, but this time we have a consolidation. That consolidation is a formation of a double bottoms in the trend continuation. We have equal lows and we even have the equal high. Sometimes to someone who understands about the chart patterns in the trend continuation, we can even get a formation of a rectangle. So this time this formation will be a double bottoms. Okay, where we're waiting to buy from is from this area, from this low, where is a demand area. So we are waiting for the market to make a retracement from this area. We are not going to be waiting from this area where is a neckline, or even the previous high, which is a resistance. The breakout from this area will be a fake out, and for us this is an opportunity for the higher high to make the higher low, so that we can enter from the higher low and our stop loss will be small. We will be taking a buy from this area. Most of the times it's better to use a buy limit by anticipating the market to continue in the uptrend. So as you make a higher high, any higher low you are making will be an opportunity for you to make money in the market from this chart pattern. Okay, now let's move straight on the chart and take some example on how can we use the double bottoms in the trend continuation and still making money with a very big profit. Okay, here we have the market that is consolidating from this area. So we have the double bottom formation. Let's see, we are rejecting from this area, from this demand area. So we created a double bottom from this area. So the double bottoms doesn't has to be like this only. The way is formed where you are going to be waiting for only the double bottom like this. Sometimes you will get double bottoms which are like this, which are not somehow equal, but still the formation is still the same. So this one will be a neckline. So we have a neckline from this area. This is a neckline. What are we waiting for? We are waiting for a retracement from this area to enter by the breakout and retracement. But now we need to see the market making a higher low, because this is a higher high because we broke above the previous high. Okay, so now what are we waiting for is to make a higher low from this area so that we can enter for the upside continuation. So this is an area we are waiting from. Okay, in general, this is an area we are waiting from. So now we are going to use a buy limit from this area, long position. From this area, at least the stop loss will be below the previous low, and expecting the market to move in the upside. Target will be from this area. So now we are going to wait and see what happens. If we can get the confirmation, enter for buy, setting a buy limit. So let's see what happens. Moving up, still higher low, rejecting from the previous high, which is a neckline. Okay, now someone who enter buy, break and retest, we also get an opportunity with this candle. But also someone who entered with the buy limit from this area, from the demand area, this is a very big opportunity to make more in the market. And even the stop loss you can see is so small. Our entry has been activated, as you can see from this candlestick. So we are in the market now. Let's see if we can get to our target. Okay, moving up, consolidating, moving up, then we go to our target. So that is the way of entering from the double bottoms in the reversal areas. So let's take an example from the continuation areas on how can we take that opportunity to enter in the market with the formation of the double bottoms. Here we have the market that is in the uptrend. So we have the creation of the double bottoms where they, from this area, let's see, we made a higher low, we made a higher low, lower high, lower low, lower high, lower low, lower high, low high to the higher high by breaking the previous high. This was an inverse head and shoulders to the higher low, okay, to the high, to the low, equal low. Then we formed an inverse head and shoulders. So from this area, that's why we are going to be looking for buying opportunity. So we rejected from this area, retracement from the neckline of the inverse head and shoulders. We created a double bottom from this area, you can see. So now this is a neckline from this area, and we have internal, this one. This is a neckline in general. So where are we buying from? Remember, we need the higher low from where we formed from the double bottom, okay, from this area. That's where I'm gonna be waiting from. Okay, I will use a buy limit from this area. Okay, the stop loss will be below the previous lows, these candles, by anticipating the market to continue in the upside. These are TPs. Okay, this is also, let's see, even this one, and we're expecting the market to continue in the upside. Let's see if we can activate our entry so that we can continue moving up. So let's see what happened. Moving down. Okay, let's see. So our order has been activated. Let's see if we can continue in the upside. Okay, we are bullish now. It was so aggressive from this area. So now as we are moving up, the stop loss is here. Let's see if we can get to our target. Moving up, continuation, then we are still moving up. Let's see what happened. So aggressive, but we are now got to our target. The TP1 was good, the TP2, and even we go to our target. So that is the way of trading double bottoms in the trend continuation. So you can see, to someone who understands the continuation chart pattern, you can say that this is a rectangle from this area, so that you can continue with the formation of an uptrend trend. So guy, remember, you have to backtest these strategies before you start using them on your real account. Remember that. Backtest so many times so that you can get a confidence from what you see every day. Okay, so guys, remember, give us a favor, subscribe on the channel, leave the comment below, and like the video. I will see you next time. Be safe and be a better trader. Ciao. This is your best chance to know how to use this pattern between these three traders in the market. Welcome to the Trading Focus once again. Hope everyone is doing good. In today's video, we are showing you and explaining how can you enter with this strong chart pattern with breakout, break and retest, supply and demand traders, and also who can make more money in the market. That sounds amazing, guy. Subscribe on the channel. Like the video, leave the comment below, and I will see you in a minute on today's video. Okay guys, welcome back. So, by explaining this inverse head and shoulders, we are going to compare these three traders. The first trader will be trading breakout just only. The second one will be trading break and retest. The third one will be trading supply and demand areas. So we are going to compare these traders by entering in the market using an inverse head and shoulders. How can we differentiate between those traders who has an opportunity to make more money in the market and who has an opportunity to risk small amount in the market? So starting by explaining what is an inverse head and shoulders. In our previous videos, we talked about the chart patterns. Okay, so this is an inverse head and shoulder. Remember, when we have a head and shoulder is when the market is moving up and a head and shoulders formation will appear, then we signal a reversal to the downside. And from inverse head and shoulders, that's when the market is moving down, we have entire downtrend trend. When the market is moving down, we get a formation of an inverse head and shoulders. That is a bullish reversal. So, okay, an inverse head and shoulder will be formed by the first valley, which is even lower, and the second valley, which is lower than the previous valley, which is this one. So this valley is smaller, is lower, and this one is deep. Okay, you can see from this one, and even this one will be lower somehow compared to the middle valley, which is a deep one, which is a head. So that's how an inverse head and shoulder is formed. Okay, so how do we trade from that formation of inverse head and shoulders? Remember, from our previous video, we have been talking about trading from the strong areas, reversal areas. If we are expecting a reversal, that's when we are expecting the change of the direction of the market, the change of the trend. If we are moving down, we are expecting the market to be reversing to the upside. Okay, we have this move down from this from upside, then we had a formation of an inverse head and shoulder. That's why we get an opportunity to be expecting and prepared for buying from this area by expecting the market to be reversing to the upside. So that's where we get an opportunity to be buying from. Okay, this formation of head and shoulders, we have to be reversing from strong areas. That is going to give us a fact that we are going to change the direction to the upside. So I've been talking about the reversal areas. So we have the market before rejected from this area. That's when we got our first move to the upside. Okay, the market moved from this area. The buyers were controlling the market. So when we move down back, so even from this area, we are expecting the same movement of the previous. That's why we're expecting to be buying from this area. So an opportunity comes with the formation of an inverse head and shoulder. Okay, now how can we enter with an inverse head and shoulders? By using the breakout strategy, break and retest strategy, and even supply and demand areas. Okay, so now we are going to start by using example. But before we jump to the chart, let's explain this. If we are going to enter from this formation, first we have a neckline from this area. From the neckline, that's where we are going to be waiting for the breakout from the neckline, so that from someone who want to trade by with the breakout strategy, we'll be waiting outside the neckline, the formation of a bullish candle, to get that opportunity to enter for buy. Okay, so you wait for the candlestick to close above the neckline so that you can take that opportunity and buy from there. So if you enter from this area, you will enter when this candle break and, remember, break and close above this neckline. So you enter for buy from this area. When the next candle start breaking above the previous candle, the stop loss will be below the previous low of this candle, and then the target will be equal to the formation of this head. So at least the market, you are going to be expecting to take profit from this area. So that's how someone will be entering by breakout, will be making money from this chart pattern. So from someone who wants to trade break and retest, which is better, we'll be waiting for the market break out from this area, from the neckline. So then we get a retracement from the previous high, which is a neckline, where the resistance turn into support. Then we go ahead and we enter from the higher low. This higher low was a pullback to make a retracement from the previous high, which is a neckline, and this is a resistance also. When resistance turned into support in the uptrend, that's where we are going to be entering from the support. So from someone who enter with the break and retest, we'll be taking a buy from this area. The stop loss, when we are trading an inverse head and shoulder or head and shoulder, the stop loss have to be below the shoulder, okay? And the the market to change the direction to the upside. The stop loss is the same as someone who will be entering with the break and retest, okay? And this time the stop loss will be lower compared to the first trader who trade break and retest. And from someone who trade breakout only, the stop loss will be in risky by setting it the previous low of the formation of the candle that has broken out where you enter from. So now let's move to the chart and see how the market will give us that opportunity, and entering by breakout and retest and supply and demand. Which trader will get more than others? Okay, now from the chart, we have an inverse head and shoulder formation. Okay, we have the first shoulder, we have this head, and we have another shoulder from this area. Okay, the formation of a head and shoulder sometimes confuse those beginners. Sometimes we get an inverse head and shoulder like this, formation like this, where some shoulders are not equal, but the formation of a neckline is from the same area. Okay, you will find different inverse head and shoulders, but still forming the same formation of head and shoulders, sometimes like this, where you get a neckline like this. That is also an inverse head and shoulder. Okay, now we have a formation of an inverse head and shoulder. Where are we going to be entering from? We have a neckline above this area. Okay, this is a neckline, which is a resistance. And remember, when we are forming a chart pattern, we are in the consolidation. We are expecting the breakout from that consolidation. When we make a high from this area, we'll be waiting for the low to continue with the higher high. To someone who trades supply and demand, to someone who trade break and retest, we'll be waiting for breakout, make a retracement where the resistance turn into support so that we can enter from this area. To someone who trade breakouts, just only we'll be waiting for the candlestick to be closing above where we failed to break before, so that you can take an opportunity to buy from the breakout from that candle by expecting the market to continue moving up. Okay, so if I'm a trader, I'm a supply and demand trader, I will be waiting the market to be making a retracement from this area, and someone who wait for break and retest will be waiting from this area, supply and demand from this area, breakout will be waiting for the candlestick to break out of the neckline so that you can take an opportunity to buy from the next candle, start breaking above the previous candle. Okay, so we are going to see how can we enter by using those strategies. Which trader is doing better in the market? We are moving up, we broke above this area, So from someone who trade breaks out, we'll be waiting for the next candle start breaking above the previous candle so that you can enter from this area. So let's see what happened. Okay, that was a fake out. We started moving down a little bit. We are now in the consolidation, back in the consolidation again. We have to wait above this area if you are trading break and retest. Okay, you have to wait for the breakout retracement from this area, and this one is a fake out. Okay, to someone who trade breakout, we'll be waiting again to break above that area. Okay, let's see what happened. Moving up. Okay, we are moving up. So someone who trade breakout, you cannot enter from this candle. This candle is longer. If you enter from this area, you are supposed to enter by the next candle starting breaking above the previous candle, and the stop loss will be below at least this area or the previous candle. And the target, remember, has to be equal to the formation of a head, which will be from this area will be equal to this area. Okay, if our target is from there, how much can you make? The stop loss will be bigger than you are expecting. So now I will prefer to wait for the breakout and the retest, and even trading from demand zone. So now let's see what happened. Moving down. Okay, making a retracement from this area. So now this time we are going to take a buy from someone who trade break and retest, but the stop loss have to be below the shoulder. The only opportunity we have, the target will be bigger compared to the breakout trader. Okay, so we are expecting the market to continue moving up. We got an entry, so we are waiting from someone who trade from demand area. Let's see what happened. Okay, moving up, we're in the profit consolidation. So aggressive. So I will be waiting from this area by setting my buy limit. Okay, buy limit will be from this area, at least this area. The stop loss will be below as the same from the breakout and retest. Now we are expecting the market to continue in the uptrend, or we are going to be activating our buy limit. Remember, to someone who trade demand or supply and demand areas, we'll be waiting the breakout higher high by breaking above the previous high, higher high to the higher low to continue with the higher high. Okay, that's how the scenario is. So now let's see what happened. Moving down, let's see if we can activate. Our order has been activated with this candlestick. Okay, we are in the good position now. Our order has been activated from the demand area. So let's see now what happened. Can we keep moving up? So we are moving up, starting breaking above the previous high by creating higher highs. Let's see what happened if the market will continue until we get to our target. Okay, now looks like we are so close to our target. So we are now got a profit from this area by changing the direction to the upside from taking an opportunity of an inverse head and shoulders. You can see someone who trade supply and demand zones, we get an opportunity of making more than the breakout trader and even the break and retest trader. So the problem with someone who will be trading with the breakout and retest strategy will be setting a stop loss which will be bigger than someone who use demand and supply strategy. So guys, you have to backtest this strategy before you start using it on your real account so that you can get better and confident to enter in the market and be consistent by making money from this market. Thank you so much for your time. Until next time, remember to subscribe on the channel. Be safe. I will see you next time. As a professional trader, your job is to plan how you are going to be entering in the market and make money from your trading decisions. Welcome to the trading again. Hope everyone is doing good. In today's video, we are showing you how can you focus on strong signals and consistently make money in the market week by week. That sounds amazing, guys. Subscribe on the channel, leave the comment below, like the video, and we see you in a minute on our today's video. Okay, welcome back, traders. If you are watching our videos from at least the 1st of January this year, we have been in profit. Most of the traders who have been watching our videos. So we predicted gold, the XY, Euro USD, GBP USD, and even GBP Japanese yen. So from now, we are still in profit from the start of this year. Then now, we had different videos of the pre-market analysis from our previous days as we continue to go together for everyone who watches our videos as a purpose of being consistency in the market. In today's video, as I said, we are going to be looking at how do we look those different trades and what are we expecting from today, next day, and even next week. So we had gold. So we are predicting gold to move trend continuation. So let's check from the screenshot. Okay, this is gold. This was the 80th. So as you can see from these areas, from this area, we're expecting the market to continue moving up. We're supposed to be buying from this area and even this area. I think you remember where from Monday. That's when we did pre-market analysis and trading ideas. Gold has moved up and we continued moving up from this area. This is 2.903. Checking from the chart. Okay, this is an area we are predicting the market to continue moving up. We had two areas to buy from. The first was this one, and the second was to continue by breaking above as an uptrend continuation. Remember from my previous video, I was talking about how can you use a candlestick that is losing momentum from the downside, looking for buy from that candlestick, whether it's a bearish or a bullish. So as you can see from here, this is an entry, this is an entry to buy from. Then you set your stop loss from the downside as expecting the target, which is the same move as the previous movement from at least this area. That's the movement we have been expecting as an uptrend continuation. The target was at least from these areas. So because this was a new high, that's why we have to measure from the previous high, okay, like this, as you are expecting the same movement from the next opportunity. So that's how we predicted this one, and then we got a profit from these areas. So from that, you remember well, if you watched our videos, we are in the trend continuation, we are in the uptrend. So then what we are predicting even from today, we are still looking for where can we buy from as a trend continuation. Now, the market yesterday, I think it was yesterday, we are expecting to stay above this area. We had this area, we got a fake out from this area, but you know where about gold? This area, this movement was from this inside area, was a retracement from this area, and then turned into support from this area as an uptrend continuation. The same candlestick that I was talking about was an entry. This one was to enter. We had to enter from this area, the stop loss from this area. And then the target, we had to be looking at least the movement like this one, okay, from here, or look for how can you target these areas. Okay, that's the movement we are supposed to be targeting. So now we moved up, we got a profit from these areas, and then the market rejected from the high, the same movement we had. Okay, you can check from here. This was the high, we got another high, we got another high to another high. We are expecting to continue with another high. That is a higher highs. That's what I'm talking about. So looking back to where are we exactly looking to be buying from? This area is just so confusing from now. Gold is not moving well. You remember from yesterday, we got a movement from the currency pairs which are related with the dollar, like GBP USD, Euro USD. The market was moving up, the dollar was losing the value. So then what happened? Gold tried to resist from these areas, then we end up pushing down again. We are still rejecting from the previous low where we rejected from yesterday. We have to be very, very careful from this area. Okay, there is a high probability for the gold to even break below this area and start targeting this area as a pullback, or even continue breaking below this area and then we start targeting this area. So how can I buy from here? Okay, buying from this area, what do you need? You need at least to start creating higher highs. As you can see from this area, if we start breaking this area here, we need to start making higher highs and higher lows so that we can also again enter for buy. Okay, we are expecting to buy above this area from the retracement, or we make a high. Maybe we are creating now a low to the high to the low from this area, and we enter for buy. So if we got a higher high from this neckline, higher high, any higher low from this area, maybe it will be from this area or down here, I will be looking for buy from that area. So we have to be careful until we get a volume from, we are now in the pre-New York session. We are expecting the volume. As you can see, the volume is now coming a little bit. We are still waiting. Then we are expecting an uptrend continuation. Let's see what happened. Maybe the market is going to push down and then we end up creating a deep pullback from this area. So you have to be careful and buy from those areas that I specified. So from other pairs, let me take a look on GBP USD. Okay, GBP USD, this was you see these words, I can check from there. I did a screenshot to WhatsApp members of the trading focus. Okay, let's check. This was a screenshot. What I was talking about from here, the history repeat itself in the market. So as you can see, the market was moving up from this area and then we end up pushing down. For someone who expecting to sell from here, expecting the downtrend continuation, then also we are in the strong uptrend, pushed up and continue the uptrend. Another consolidation, the same consolidation. This one is the same as this one. So I was expecting also another downside, then we start creating a high highs and high lows, and then we continue upside. This was a screenshot I sent in the group members. So what happened was, what I was predicting from there is what happened from here. So the market moved down. You can see before the market was from these areas. Then the market pushed down from here as a fake out somehow, but we're rejecting from this area also. Can check everything from this area. Then we started making higher highs and higher lows. Okay, you can see from here, from 30 minutes. Check from 30 minutes what happened there. Entries from this area, we got a inverse head and shoulder from this area, and see it from here, high to the low, to the high, to the low, to the high, high to the higher low. So internal area from this area, these are also entries, and this one was an entry from this area. This was a retracement to balance this demand area from here. You can see it from here. So someone who entered from this area, that was a very good entry for buy. That's how we predicted GBP USD if you watched from our previous videos, and even that's how we took different trades from those opportunities. So from where we are standing now, so the entries that we entered from, these are all entries. Position from here, this was an entry from this area. This was an entry, uptrend continuation. So many entries. This was an entry from these areas. If you watch our videos, you will understand the way we enter the market. You can go back and watch from our videos so that you can learn more about trading entries, uptrend continuation. So remember the target. Remember our target was from, let me check well. The target is from this area. Let's move to the higher time frame and see H4. For our time frame, okay, I can explain here so that everyone who didn't watch our videos, you can get this opportunity. We reversed from this area. We predicted this before. We're expecting uptrend reversal from this area. We entered from this area. We took so many trades from this area. Then now we are still continuing the upside, breaking the highs of the previous movement of the downtrend. So now we are targeting this area. This was our last buying stronger volume. Then now what are we expecting from H1 1 hour time frame? We are still expecting to buy. Where are we buying from? I'm expecting at least these areas, even this one from downside. These are imbalanced areas. We did so many different videos talking about imbalanced and balanced areas to buy or sell from. So even from where we are standing now, these are highs also, but I do not like these areas. If we reject from here, it's okay. I will be looking for more confirmation. Remember, I will be looking for more confirmation. I will be looking for an uptrend continuation, buying opportunity from the formation of the chart pattern from this area. At least if we start creating another inverse head and shoulder, I can go ahead and start entering from those areas, anticipating an uptrend continuation. So that's how is GU. From Euro USD, let's check from there also. The same, okay. Moving to where we predicted that. Euro USD, okay, we had this area. We are expecting the market to continue in the uptrend. This is an area we specify that the market will continue in the uptrend, or also buying from this area. So checking from our chart, this is an area I was talking about, this one. So now what are we looking for? We entered from this area, taking a buy, also anticipating the market to continue until we target this area. This area is from January. Remember we talked about that. So at least let's target this area. Where are we entering from now? If we get an opportunity to enter the market, checking from areas where we can buy from. We have this area as an internal area from where we are rejecting from now a little bit. You can see this candle is losing momentum. We also have this area down here. Can also reject from there and enter for buy as an uptrend continuation, okay, from these areas. So you have to make sure that you have a strong confirmation, because even the market can move down. Then we create an equal low from these areas before we continue. Is to enter the market and even manage a risk. So that's why trade what you see, not what you think. So if you see that this is an area to be buying from, if you get a confirmation, just enter the market and remember to manage risk. So that's what I can say from Euro USD. Okay, checking from DXY, dollar index. Okay, dollar index. Okay, let me first check from the screenshot. Okay, DXY dollar index. Where is it? You don't see it very easily here. Okay, maybe it's not there. Our previous video on Monday, pre-market analysis, you can go and check it from the video. So what did we do? From January, we have been expecting the market to reverse from the upside. Remember this zone, never forget about it. Okay, so that's why we're expecting a reversal. So we reversed from there. We predict this before it happened. These are areas we specified them before they start moving down. So all these entries talked about them. So this was an entry I was expecting to be selling from our previous video. We talked about this. We had two areas. We had this one and we had the last one, which was this one. Okay, let me show you how this works. So we had the market that was moving. We had lower low to the lower high, to the lower low, to the lower high, to the lower low, to the lower high. This area is balanced, this area is balanced, but this area is imbalanced. We do not have a lower high. Okay, you can see from here. So we need the market to be balanced. This one is balanced, this one is balanced, but this one wasn't balanced. Okay, so that's how the market moved down from this area. Someone who understands or watch our videos will be taking profit. Okay, so now what we are looking for, we are looking also from these areas, these internal areas from here, and even from these areas. You know how the XY move. The XY and even gold, those are the pairs that respect most of the times demand zones and supply, the same as this strategy of break and retest. So you have to understand that. So we are still expecting to be selling from these areas. So you can enter for sale from this area or this area, as we are expecting the downtrend continuation. So at least this one will be very strong to sell from there. Remember the target, move to H4. H4, the target is still the same as the previous one. The daily time frame, let's check from there. Daily time frame, we are still expecting targeting these strong areas, at least this one. Okay, let's see if we can pass from this one also, as we are targeting from this area where we can reverse from as an uptrend continuation. Remember also we predicted this from last year, this one, and then from someone who entered the market and as a swing trader, he made or she made a lot of money from this daily movement. Okay, so let's move to GBP, GPY, GBP, GPY, GJ. Okay, let's check from everything. Moving to the lower time frame. Okay, now remember from our previous videos, pre-market and analysis and trading ideas, this rejection was from this area. This is a demand zone. You can see it from here. Okay, so then we had the downside, had this one and this one. This is from which time frame? This was from daily time frame. Then we had a movement from this area. We moved up, but this area was imbalanced. Remember from the previous prediction, we're expecting the movement to make a retracement from this area, from where now we are standing and we are standing and moving up from, as well as we are still expecting also maybe the market will continue moving down, reverse from this area. So this area, this is what I'm talking about from here. Let us check it well. Okay, this is an area I'm talking about. We can also reverse from this area by expecting the market to move up. So from now, H1, check from there. What are we expecting? So we rejected from an area that I was talking about, or we mentioned this area. We're expecting the market to move down as a deep pullback. Then we are rejecting from this area, but from now, what I see, I will not enter from here. You can see these are areas to enter from, but I need the market at least to make a retracement from this area. This will be stronger enough to go for buy. But if we continue from this area, I will also be looking, maybe I can enter from here but not risk much. Better entries will be breaking above this area. This one will be an amazing entry to buy from. So that's what I see from now. Anticipating uptrend continuation or a reversal to the uptrend. So let's wait and see the movement from here. I wish this price to break below, at least we start rejecting from this area. That's why I'll be looking for buy from. So those are all we talked about from our previous pre-market analysis and trading ideas. So you have to check from there and continue making money in the market consistently. So from there, guys, thank you so much for your time. Until next time, remember to subscribe on the channel, leave the comment below, like the video, and I will see you next time. Be safe. One of the toughest tasks in the market is to know which signal is stronger to confirm selling or buy entries. Welcome to the Trading Focus once again. Hope everyone is doing good. In today's video, we are going to show you one of the best strategy by using just one candlestick as a confirmation to enter the market. That sounds amazing, guys. Subscribe on the channel, leave the comment below, like the video, and we see you in a minute on our today's video. Okay, welcome back again. So again, let's start with the rules. Okay, these rules that are going to be showing you where we are going to be entering from, what are we supposed to follow so that we can enter from this confirmation. So we have two candlesticks here. We have a bearish one and we have a bullish one. This candlestick has a long wick on the top, so which means we have a selling volume from the upside. That means the sellers are trying to move the market down. That's why we are losing the momentum from the upside. Or this candlestick has a long shadow on the top, which is longer than the lower one, this one. So which means the sellers are trying to push the market down. That is an indication number one. We have a signal saying that even if the buyers are trying to move the market up, but we have also a pressure from the sellers that are trying to push the market down. So this will happen especially when we are in the downtrend. So we prefer to enter by using this candlestick to go for sale in the downtrend. Make sure that you confirm that you are in the trend continuation or you are from bearish reversal areas which are very stronger, that has all what is needed to signal the market that is going to be reversing to the downside. So that's how you are going to be successful with this confirmation. Okay, how do we enter with this? Let's start by a trend. Okay, so let's start from bullish. The market will be moving down by making lower low to the lower high, to the lower low, to the lower high. So from the lower high, we have a confirmation of a bullish candle which is losing momentum from the upside, which means that we have been moving down. So we are in the downtrend. Then the market tried to make a pullback. Okay, as you can see, this is a pullback. The markets tried to move up, but the sellers from the upside, they are saying, no, we have to continue in the downtrend. That's why this bullish candlestick, which was making a retracement, was pushed down and we end up with a long shadow on the top. So this is a sign that the sellers are going to be controlling the market. Most of the times traders prefer to enter the market. If we are selling, we enter after the confirmation of a bearish candle. So this time, this is an opportunity to someone who understands how the market moves. Now, after this candlestick close, after confirming that is a candlestick has long shadow on the top, this is a inverted hammer. So this time we are going to use it in the downtrend to take a sell. So how am I going to enter? I will enter, remember this, I will enter when the next candle, when the new candle start breaking below the low of this candle, okay? We have two options to enter from here. It will depends on the volume of the market. When the market is moving so fast, we have the volume in the market. We have to enter from here when the next candle starting breaking below the low body of the previous candle, this candle we have here, or when the market start breaking the low of the week. Okay, so let's say we have a candlestick that is, it has to be bearish, because when we start breaking below this area means that we are bearish, we are no longer moving up. Be careful with this. When you see this candlestick close like this, you are not going to immediately enter in the market. You have to wait. The reason why you will have to wait is that we need to enter when the candlesticks start breaking the previous lows that I have been talking about. Okay, so we have a candlestick that opened from this area. It has to be bearish. So this candlestick first pushed up. Okay, let's say we have this wick from this area. Candlesticks tried to move up, and then we pushed down. We open from this area. Okay, let's say we open from this area. This time when we open, there is no wick. Even if I use this wick, it's okay. So when we open and try to move the market up, this is a high. Next one, we need to go for the low. When we are moving up from here, we are bullish. But when we start losing momentum again, this is the new candle from this one. That's where we start. That's where the candlestick is going to be bearish. So as long as we start breaking below this area, that's why we are going to be entering from, looking for sell, as we are expecting the market to continue moving down. That's how you enter from this candlestick. First, we have to enter when the candlesticks try to move up, making a high. When we start making a low, we are bearish now. When we start breaking below this area, we are going to be entering from here. And even this strategy is very, very good when you know how to use stop entry orders. So here we have to use a sell stop. It will be better if you know how to use sell stop order. Now, what I have also to be careful with, when we see this candlestick moving down, so the reason why we have to wait for this candle to make a high before we make a low, when the new candle sometimes can move up, okay, and leave a long shadow also on the top. When you entered from this area, after this candlestick closing, you enter from this area. If you enter before this candlestick start breaking the low, what will happen? The market, maybe this candle can move up before we start to move down, before losing momentum also from the upside. When you enter from this area, this is your opportunity that the stop loss is going to be here. If you enter before, the stop loss has to be here. But this time you are going to lose because you are not waiting for this candle start breaking below this area. So that's why when you enter from here, you are going to set your stop loss above the previous high, and then anticipating the market to continue moving down. Okay, so that's how you enter from this bullish candle that has a long shadow on the top. Remember, you have to make sure that you are in the downtrend. So let's talk about this bearish candle, which is a shooting star to someone who is familiar with the candlesticks. When we are losing our momentum from the upside, from the top, the candlestick will move down as the sellers trying to push it down, So make sure that we are in the downtrend continuation, or we are from the areas of bearish reversal. Okay, we are going to be looking for, here we have a lower low, we have a lower low to the lower high, we have a formation of this candle which has a long shadow on the top. We are going to be looking for a trend continuation. The same entry we are going to enter when the next candle starts breaking below the previous lows of the previous candle. When this candle starts breaking below the previous candle, which has a long wick on the top. And again, remember, you have to wait for this candle start breaking below this area, because we are expecting maybe first this candle is going to be moving up by creating a high. When you are setting a stop loss from this area, when you enter immediately when this candle closes, before the next candle starts breaking the previous low of this candle, you have high probability for losing this trade by setting a stop loss above the previous high of this candle, which is a wick. So this time, from the new candle, when we start breaking below the previous low, that's where you are going to be successful in the market by using this strategy. So now we are expecting the market to continue moving down. Okay, so now, before moving to the chart and see some examples, let's also explain this. Okay, so how are we going to be entering? From which areas? So, when we are using this confirmation of these candlesticks, we have to be looking for sell, just only. Okay, so the market will be moving down, making lower lows and lower highs. Okay, so this is the first way to enter with this confirmation. So I'm gonna be entering from this confirmation with the strategy of a breakout and a retest. So break and retest, when I get the candlestick from this area, I will be entering from there. So this will be a support and into resistance. When I get a bearish candlestick which has a long shadow on the top, or a bullish candle which has a long shadow on the top, that's why I'm going to be entering for sell. Okay, again, that is first. Secondly, let's say we are in the areas of a bearish reversal. So, which means that the market was moving up. So from this area, we start creating equal highs from this area. So I will be looking for the chart pattern from this area so that I can enter from there. Okay, so as we're expecting to move down. From this area, I have two ways to enter from there. This is a double bottom. This is a neckline. So retracement from the neckline, we are from the uptrend to the downtrend. We are expecting a bearish reversal. I will enter from here, lower low to the lower high from our previous high to balance this area. I get a candlestick which has a long shadow on the top. It has to be bearish or bullish, so I will enter from there expecting the market to reverse to the downside. Okay, another way is that when the market is creating an equal high, okay, let's say the market is moving down, okay, lower low to the lower high to the lower low, or equal low from this area, equal high. So if I get the candlestick when I have this first high and the market rejecting from this area, pulling back to this area, I will also enter from this area after getting that candlestick confirmation. Even when we are making lower low to the lower high from this area, which will be an equal high, I will be enter from there looking for sell after confirming that we have a bearish or bullish candlestick which has a long shadow on the top, which is longer than the bottom shadow. The bottom shadow have to be very small. So now, after those rules, we are going to move to the chart and take some examples on how can we use this strategy after getting this confirmation. Let's take an example from here. We are from reversal zone from this area. So now we have been moving from this area, making the high to the higher low, to the higher high, higher low, higher high. This is a creation of the chart pattern. This is a supply zone area. We left from this area, the neckline, and even we got another lower low to the lower high by making a retracement from this area, from this one. So we got a candlestick with a long shadow on the top, which is bearish. So this is an opportunity to enter from this area. Remember, to confirm that we are going to move to the downside, we have to make sure that the next candle first make a high. When we start making a low by breaking the low of the previous candle, this one from this area, that's where we are going to be entering from, because there is a high probability for the market to continue pulling back, and then we have this area where we can also make a retracement from again. That's why we have to wait for the candle to first start breaking the low of the previous low so that we can expect the market to continue moving down. Okay, so we are going to be using a sell stop. It's better taking a sell below this area. The stop loss will be above the previous high of this candle. Now the target, remember we are scalping, the target will be at least from this area. We need to cover this area. So now let's see what happens if we can get to our target. Okay, we are moving down by rejecting from also from this area, liquidity grab. We are still in the game. Okay, we are moving down. So looks like we are so close to our target, and also we have another candlestick that is rejecting from this area. Okay, let's see. Can we take a sell from this area? The answer is yes, but we have to check where are we going to be taking a profit from. TP will be from this area. Okay, let's try and see how much are we losing and how much are we going to be targeting. If we enter when the candlestick start breaking below this area, the stop loss will be above this high, and this will be a risky entry. So I can see that the market is going to be targeting this area. The stop loss is so big. From here, I will leave it and wait for another opportunity. Let's keep moving and see what happens. We are still moving down. Okay, breaking below that area, moving up. Okay, so we are still waiting from these areas. This is where also we can take a sell from. Okay, I got another candlestick from this area again. So I will enter for sell when we start breaking below the previous low of this candle. Stop loss is above the high. Okay, the target this time is from this area at least. This is a scalping strategy. When we start breaking below this area, we are expecting the market to continue moving down. It goes slow and look for other opportunities. Okay, moving down. We are in the profit now. Let's see if we can get there. Still moving down. Rejection from that area, moving down. So we go to our target. We have 2 wins. Let's keep moving and see what happens. If we can get another opportunity. Now we are waiting from this area, and even from the equal highs, from these highs, we can take a trade from there. Okay, let's see what happened. Okay, we have another candlestick that is rejecting from this area. This shadow, upper shadow, is longer than the lower one. So we are taking a sell also from this area. Selling from this area, this time when we start breaking below the low body of the previous candle, we are expecting the market to move. This time, where are we targeting? Okay, let's see the downside. Still this area. Let's say at least this area. So How is the stop loss? If we start breaking below this area, the stop loss will be reduced because it will be above the previous candlestick. Let's see what happened. Okay, we moved down and then we go to our target also again. Let's see what happened again. If we can get another confirmation, we are making a retracement from this area, but we need the candlestick with the long shadow on the top. Okay, we are moving up. Okay, moving down. We have this candlestick tracing from internal area. Let's see. Okay, this is an internal area. We can enter from this one, taking a sell from here. If we start breaking below, because we missed this one, the stop loss is above this area. Anticipating this time downtrend continuation, because we have a lower low to the lower high, we're expecting a lower low. This time the target will be from this area. Let's see if we can start breaking below this area for the next candle. Okay, this time this is a loss. Okay, where are we waiting now from to sell? We have this area and even we have this internal area, but we broke it above. We have to wait from this one. Let's see what happened. Moving down. Okay, moving up. Okay, we are rejecting now from this area. Can we get a confirmation? Okay, we got a candlestick that is rejecting from this area, so we are taking a sell from there. Still anticipating the market to target this area. Okay, let's see. Okay, moving down. We got another candlestick even from this area. We should be entered also from there if you are not in the market. Moving down, see what happened. Okay, still moving down. We are rejecting from this area. Okay, remember, as we are scalping, you have to be careful with managing risk. As long as you see the candlestick is trying to reject so multiple times, sometimes you have a decision to close. We are going to leave our trade and see what happened. Okay, still consolidating from that area, moving up. Okay, can we reject from this area? Let's see. We don't need this candle. Okay, we have a candlestick from this area. If we get another candlestick that breaking below this candle, we are using our sell stop to enter from this area. This time my stop loss will be above the previous high of these candles, because as long as we start breaking above this area, the market has high probability for the next candlesticks to cover this area. So that's why I also need to wait for the next candle to start breaking below. If we don't start breaking below this area, we are not going to be entering in this market. The target is still the same. Okay, let's see what happened. So we got a loss from also this trade. Looks like we are going also to lose from this one. Moving down. So okay, we got a candlestick that is bearish with a long shadow on the top. So we are going to enter from this area because we missed this one. It was an opportunity for us to take this trade. Stop loss is above the previous high. We took a loss from this trade. Okay, my target is from this area. Where are we rejecting from? Okay, from this area. Expecting the market to at least target this area. This is a scalping strategy. You have to focus on the movement of the candlesticks. Moving down, we are in the good profit. Still moving down. Okay, we are making a retracement from this area. Also here, we got another candlestick that we can enter for sale again. Taking a short from this area when you start breaking below the previous low. Okay, the target. Now we are moving down, targeting this area. Let's see what happened. Moving down, okay, we got a fundamental from here. Then we got to our target. How did we get to our target from here? The reason is that as long as we are using a penning order as sell stop, the candlestick first made a high before we start making a low. That's why this trade is a profit. That's why you have to wait for this candle to start breaking below the previous low so that you can expect the market to continue moving down. Okay, those are all confirmation that you need to take up opportunity from by selling from that confirmation. So how many trades did we take? Like 8 trades, and then we won 5 trades, 3 losses. So that's so good as long as you are consistency on that strategy. Remember, you have to backtest. Do not watch a video and then you just say that it's just usual in the market. Just go and backtest. Follow the rules. You can watch this video more than once so that you can make sure you are following those rules. Then backtest. You have so many ways to backtest. After that, when you get a confidence from the strategy, start using it on your real account. So guys, thank you so much for your time. Remember to subscribe on the channel, like the video, leave the comment below, and I will see you next time. Be safe. "18 trades, 4 losses, 14 wins." What about that? Welcome to the Trading Focus once again. Hope everyone is doing good. In today's video, we are going to teach you the strategy that is going to make you a profitable trader. The only confirmation that we are going to be showing you is the key weapon to make money in the market. Just carefully watch this video until to the end. You are going to be a profitable trader after this video. That sounds amazing, guys. Subscribe on the channel, support this channel, like the video, leave the comment below, and I will see you in a minute on today's video. Okay guys, welcome back. So starting with this confirmation to enter in the market by using these candlesticks, we have to go with the rules. That's what you need to follow before you take a trade from this confirmation. So we have 2 candlesticks here. We have a bearish candlestick and we have a bullish candlestick. From here, you can see from these candlesticks, they have a long shadow on the bottom, both of them, the red and the green one, a bullish and even the bearish. So what does it mean? I talked about this from our previous videos about the buying pressure and the selling pressure. We are going to look on how can we use this one. So the reason why from these candlesticks, let's start by explaining them. You can see the market tried to move down. Okay, let's start from this bullish. And then after that, the price pushed up. Those are the buyers. Remember, the buyers are pushing from the down to the upside, and the sellers are pushing from the upside to the downside. So here, the candlestick closed with a long shadow on the bottom. That means that the sellers are losing momentum. Here, we have a buying pressure. So what are you expecting if the buyers are so aggressive to control the market? What will happen? The next thing you have to keep in your mind is that the market is going to be controlled by the buyers. So we are going to look on how can we get this opportunity and deal with that. Where can we enter from by expecting the market to continue in our buying direction? So from the bearish, okay, we have a bearish candle that was pushing down. Okay, it was bearish, a full body from the downside. So then after that, the candlestick started losing momentum from the downside. So which means that the buyers are also trying to put pressure on the sellers, which means that this is also a buying pressure. Remember that and keep in your mind. The difference between these candlesticks, only the color, but the downside shadow is the same, which means that they are all forced to move up, which means that the buyers are trying to push from downside to the upside. What are you expecting? I'm expecting for the next candle to start controlling the market by moving up, because the buyers are pressing from the downside so that the sellers are no longer still having the energy to push the market down. That's why we are expecting the buying opportunity. So you see the candlestick like this. These are two candlesticks. You see the candlesticks like this, and you start thinking that, oh, how am I going to enter from this? Which rules am I going to be following to enter for buy from these candlesticks? Okay, first, let's talk also again from this candlestick. How can you enter? So first in first, this is what you have to make sure that you have to confirm before you enter the market. You have to confirm that you are in the uptrend or you are in the bullish reversal, to make sure that you are in the strong position for the market to be controlled by the buyers. Okay, let's say the market is moving up. This is a higher high to the higher low, and you get this formation of this is a hammer, by the way. So you get a formation of this candlestick which is bullish but is losing the momentum from the downside, has the long shadow on the bottom. So what are you expecting? Where are you going to be entering from this candlestick? You first wait for this candlestick to close, okay, to confirm that this is a hammer or whatever you can call it, or a candlestick that is of the body or even the high from the upper shadow, this one. That's where you are going to be entering for buy. Okay, let's say the next candle is going to be opening from this area from here. Okay, so the candlestick open like this. If we have the candlestick that opens like this, which is a bullish, we have even shadow inside. This candlestick is bullish. When we start breaking above the previous high, this is a previous high, that's where I'm going to be entering, and we enter from this area. And this shadow from the down, I need the candlestick that's first make a low. After creating a low, leaving like a little shadow from the downside, which means that also this is a sign that the buyers are trying to push the market up. Okay, this is what we need to see. So from here, when we start breaking this area and this one, that's where I'm going to be entering by buying. Okay, so why am I entering from here? The reason is that as we are breaking above this area, we are free to continue moving in the upside direction. So I'm expecting the market to continue in the uptrend. That's why I will enter from that area, expecting the market to move up. Okay, so that is from bullish candlestick. So from bearish now is the same. If we close, okay, let's say the market is moving up also again. We are creating higher highs, higher low. So from the higher low, that's where we get a creation of the candlestick that is losing our momentum from the downside, and that candlestick have to be bearish. Okay, so if we get this bearish candlestick, this is where most of traders are going to say, oh, we are bearish, we are not going to be entering from here. So if you check from even the lower time from like 5 minutes, you're gonna find some candlestick which are bullish from this shadow. That's why we are pushing up. So what am I looking for? I will be waiting for the candlestick which will be bullish. I need the bullish candlestick. Okay, I need the bullish candlestick from this side, the same as the previous candlestick that I was looking for. From here, I will need a candlestick starting breaking above the previous high of the bearish candlestick. Okay, remember this shadow from the low. This is a buying pressure also again. So I will need the candles to continue like this, creating this is buying opportunity pressure. So when we start breaking above the previous high of the bearish candle, we are expecting the market to continue in the upside. That will be our entry to expect the market to continue in the uptrend or entering for buy, and we are going to be taking opportunity from that and take the profit. That's how I will be entering from those candlesticks. Okay, again, another rule that you have to follow. We confirmed from where we are entering. When we get this candlestick, we have to be in the trend or in the trend continuation. So what are we looking at? Okay, remember, as we are moving in the uptrend, we are making higher high, higher low, to the higher high, to the higher low, to the higher high, to the higher low. Then we continue with the higher highs and higher low. Remember our previous videos, we talked about the breakout and retest strategy, and we talked about the balanced areas you have to look at to buy or sell from. So when we are moving up, we are creating high highs and higher lows, and we have the strategy that is called break and retest. Okay, that's where we wait for the market to make a pullback and make a retracement from the previous high. This is the previous high from here, this one, which is a resistance and into support from this area. That's where you are going to be entering from. So that is the first rule I will be going with from those candlesticks that I've been talking about. If I see the candlestick that is rejecting from this area, which is bullish or bearish, that's losing momentum from the downside, I will be entering for buy from that candlestick. From here, I will be entering for buy from that candlestick. Then, what else I'm looking at? From balanced areas. Okay, the first rule to enter from that candlestick, it will be break and retest. Okay, secondly, I will be looking for balanced areas or from the demand areas. Okay, the market is making higher high, higher low, to the higher high, to the higher low. So that is where you got a demand zone from this area. So when we get a candlestick from this area, I will be entering also for buy. So remember, it has to be bearish or bullish with a long shadow on the bottom. So I will be entering from this area. Then also, that is the second way to enter from price movement as we are moving upside. Okay, again, I will be looking for equal lows in the trend continuation, also higher highs, higher low. Okay, if I get the candlestick that is from these areas, from here, you can see these are equal lows, I will be also entering from this area. So those are three ways I'm going to be using these candlesticks. I want to make sure that I'm going to be consistent by entering from every trade that is respecting those areas. So now this is the time to move on the chart and see how do we deal with those candlesticks. Okay guys, this is a daily time frame from gold. From our previous videos, we have been predicting gold that we are in the uptrend direction. So we've been moving up, creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. So still expecting from these areas to be creating also higher highs to the higher lows, and then continue like that. So from there, that's what we are going to be talking about. From this area, we are going to take a look how can you be consistency entering from those confirmation from those two candles that we talked about, and then you end up by winning more trades in the market. Okay, from the higher time frame, so now we are in the lower time frame. We have been confirming that we are in the uptrend from daily time frame. So starting from here, okay, as you can see, we are from this area, we are moving up. So we are going to be scalping by scalping, we are just looking for some few pips, okay? We are going to make some dollars like every day. If you are scalping, you are looking for everyday trade, or you are taking like 1 or 2 trades or 3 trades a day. Don't enter for more trades a day because you're going to be over risking, and then you end up blowing your account. So starting from here, we are going to target some small distance from TP. So we are going to target some few pips. Now you can see we already have this candlestick, a long shadow on the bottom, and even if we enter from here, this will be our target. This is the target, and if you have to position, you have to leave the runner run, and your last target will be from this area. That's why we are going to be targeting. And also remember, we are entering when the next candle starts breaking above the previous highs, and even from our rules, we are rejecting from this area. This is a demand zone from here, and even from here, from someone who trade break and retest, this is a retracement from this area. Then the target we are going to be looking for, because we are in the trend continuation, these are all targets, okay? Now let's start with our first entry. First trade, we are looking for buy. When the next candle starts breaking above the previous high, the stop loss is going to be below the previous low, below the shadow, okay? Remember, this is our last target, and let's see what happens. When you start breaking above the body of this candle, that's where you're going to be taking a TP from. Let's see what happens. Remember, this is a scalping strategy. Okay, also again, as long as we are rejecting from this area, we are going to be looking for every entry. So the market was supposed to be making retracements from this area, but we have also to look from other areas. This will be also a retracement. This one, the same as this. So this is where the retracement will be, and then we started losing the momentum. We are taking every trade because you are going to be comparing all of these trades and see how many losses and how many wins. Okay, we are following the rules here. So we have different candlesticks that are losing momentum from the downside. We had this one, but I need a better candlestick like they have been showing from the candlestick like this one, the candlestick like this one, and the candlestick like this one where we entered from. So I need the candlestick with a long shadow on the bottom, which will be longer than the what? Than the upper shadow. So now remember, our TP was hitted. We are looking for the next TP, our final target. Let's see what happened. Okay. So we have our candlestick that is losing a long shadow on the bottom. This is a bearish candlestick, meaning that the buyers are trying to push the market up. We are taking a buy from the next candle starting breaking above the previous high. Okay, this is the target. Our TP this time, let's put it from this area. This one is going to be 1 to 2.5. I think. Okay, so let's see what happened. We are going to continue by scalping strategy. This is gold. Remember, if you are trading gold, this will be easy for you to understand how gold moves. Very easy to take these trades. We are moving up, so we got to our target. So we have one trade win, we have the second trade win. So where are we looking to enter from now? Remember, even when we move down, there are some areas which are left to be balanced. We have this area. This is even the area to enter from. Okay, this is another area to make an equal low. So those are areas that we'll be looking for. Also, if the market tried to move down, I'm not going to be looking for sell. So as we are continuing moving up, okay, can we make an equal low from this area or make a retracement from this area? Let's see what happened. Moving up, okay. So we have two candlesticks from this area. Where are we rejecting from? Let's see if we are rejecting from No, we are rejecting from this area. There's no retracement, better retracement, because if we break above this area, at least we can buy from here. If we make a retracement from here, let's see what happened. Moving up. Okay, so we have the candle that is losing momentum from the downside, the long shadow on the bottom. We are going to be entering for buy again when the next candle starts breaking above the previous. Stop loss is here. Let me check from my target. My target this time will be from these areas. My TP1 will be from this area. Okay, this is my target. Remember, this is a scalping strategy. Okay, you have to know how to manage your risk. Let's see if we can win this trade. Okay, moving up. So we won this trade also again. We had missed this trade, but also the stop loss will be so big so that it will be not a good trade also again. From this entry, from here, retracement or equal loss from here, and even above this area, I can enter from the retracement from this area. So let's keep moving up. We are still moving up. Okay, the market still moving up. So let's see what happened. Consolidation. We have this candle, but we don't know where we are rejecting from. Let's take a look from the left hand side. Okay, from here. Okay, is this an entry? But our rule doesn't support this candlestick. We have the long shadow from the upside is the same as the long shadow from the downside, so that we have to leave that trade. Okay, we have this candlestick which is so good. We can enter from this. Let's see, we enter for buy from this candlestick. Stop loss is below the previous low shadow. Our TP is going to be from this area, and even we are clean from left hand side. We are expecting also TP from this area. Let's see now what happened. Moving up, consolidation, we are losing this trade. Let's see what happened. We are looking for another opportunity. Moving up, consolidation. Okay, we have this candle that is losing the momentum from this area, equal low. Okay, if we enter from this candlestick, the problem will be the stop loss. If we enter from this candlestick, remember, we have to manage the risk. You are entering from this area. The stop loss will be below the previous low. This stop loss is so big. Okay, so I'm gonna leave this trade. Let's see what happened. Still moving down. This one is not good. Let's see what happened. We are still moving down. We have this area. Let's see what happened. Moving up. Consolidation. Where are we rejecting from? We didn't touch in from this area. We have to leave it. Okay, moving up. Okay, we are back from this area. Okay, equal lows from this area. Okay, from this candlestick, I will be entering from this area. Then I will enter for buy when the candlestick starts breaking above the previous high. My TP will be at least from these areas, from this area. This is my TP. Let's see if we can. Okay, stop loss is below the previous low. Can we win this trade? Let us see what happened. Because we rejected from this area, this one equal lows, and even this one. Let's see what happened. Okay, we are losing this trade again, moving down, equal lows from this area. Okay, this is from demand zone. Okay, this is a losing trade. 1, we have 2. Okay, let's see what happened. Moving up. Okay, making higher highs. If we make any retracement from this area, we are going to be entering for buy, but we have to wait for the candlestick that is losing a momentum from the downside that has a long shadow on the bottom or a long wick. Moving up. Okay, we are still moving down again, rejected from downside. So Are we going to take this trade? It will depend on where we are rejecting from. There is a reason why we are rejecting from this area. Okay, so I will explain this again. As long as we have equal lows from this area, if we enter from this candlestick, what am I going to be doing is to enter from here when we break above this area, but the stop loss will be below the body of this candlestick, below even the previous low, okay? Because if we start breaking below and breaking below the body of this candlestick, we are going to be feeling this weak and the market will continue downside. That's why I have to manage risk from this area. So my TP is the same as the previous. Okay, let's see what happened. We are still looking for other opportunities if we continue moving up. So this is also will be my entry if I get a confirmation with that candlestick. Okay, we have this candlestick which has a long shadow on the bottom. I need another one. Okay, which is better. Okay, we are still moving up. So this is the candlestick that I was waiting for. Okay, this candlestick has a long shadow on the bottom that the upper shadow is small. I'm going to be entering for buy from this area. My stop loss is below the previous low. Okay, so my TP is also from the same area. Okay, let's see if we can win these trades. 1, 2 trades. Okay, from even here as we stay above this area, I can even move my stop loss to break even. Let's see what happened. Consolidating, moving up. We can bring this stop loss to this area. Okay, moving up. Okay, there are some trades that we missed from this area. We are supposed to enter from here. Which one? From this candlestick, because we are making a retracement from this area. Even this candlestick, no entry from here. Entry, we are waiting from these areas and even from this area. If we make a retracement from here, let's see what happened. Moving up, this candlestick, waiting for another one. We are still moving up. Okay, moving up. We are so close to our target. So we kept moving up. Then here we won our trades. So how many trades? 1, 2, 3, 4, 5. We have 7 trades and we won 5. So let's keep looking for other entries. Okay, we are moving down. Let's see what happened. Moving up. Okay, we have another candlestick from this area also again. Where are we making a retracement from? We made a retracement from this area, from these candlesticks. I think you can see. We are taking a buy from this area when we start breaking above this area. So this fake out outside, remember from our previous video, we talked about the higher highs and higher lows as the trend continuation. Higher high to higher low continue to head to the higher high. So we have to take a look from a new TP and even this area. Okay, yeah, that will be our TP also again. Can we continue moving up? Okay, we are trying to move up. If you are not in the market, this is another entry we got from this area. Okay, this is an entry from this area. Stop losses from this area. The target is the same. Let's see what happened. Moving up was so aggressive. Still moving up. We had another entry from this area. This is a retracement. This candlestick, this bearish candlestick, a shadow from the bottom is taller than the upper shadow, and we started breaking above that area, the previous high of the bearish candle, entering for buy from this area. Stop loss is below the previous low. They are from the same. We have 3 here trades which have a huge profit. Let's see what happened. Okay, we have another entry from this area. Again, we are still in the market, we are still in the game. So aggressive, but we have to follow the rules. Previous low. Okay, can we continue moving up? If the next candle starts breaking above the previous high, we are going to be in profit. Okay, moving down. So we took 2 losses from here, and then we got another entry. So this one was a loss. Let's see, because of the stop loss. Okay, and we got another entry. Loss. Another entry from here. The stop loss this time is going to be the same as the previous loss from this shadow. Okay, then the target is the same. So let's see what happened. We are moving up. So what I'm showing you here is that as long as you are taking trades and thinking that you are losing, you see these are 2 losses, and maybe someone was supposed to be setting a stop loss below this area. That's understandable from any other strategy, okay? But from someone who's entering by following the rules that we talked about, you still have to make money in the market. That's what you have to understand. Whatever the strategy that you are using, as long as you are disciplined, you are going to make money in the market. So now we are moving up. So aggressive, still moving up. Let's see what happened. So we have also this area. You don't have to forget the internal area here. If we make a retracement from here with the candlestick which has a long shadow on the bottom, we are going also to be using this area as an opportunity to buy from. Let's see what happened. See. Okay, we have this candlestick. We are going to be enter no matter what. Your job is to enter the market and follow your rules and see what happens. As long as you back-tested the strategy, you have to be confident. That's where the confidence comes from. Let's see if we can also win this one. Moving up, still moving up. This is the retracement from this area. But remember, I'm waiting for just only the candlestick which has long wick on the bottom. So let's see what happened. Moving up, still moving up. We have also this area. If we make a retracement from this area, we're going to be entering from there. Okay, we are rejecting from this area. This is an equal low. Okay, no matter what, I'm going to take a trade from this area because this is my candlestick. Stop loss is below the previous low, the low of this shadow. Can we make a TP from these trades? How many trades do we have from here? 1, 2, 3, 4, 5, 6, 7. We got 2 losses. Let's see what happened from these 5. Okay, moving up. Okay, let's see what happened. Okay, is this adjustment? Okay, no, let's keep moving up. Breaking above that area. If we get a retracement from here, no matter what, you're going to be entering for buy. Okay, moving up. Okay, now I think we got to our target. That was so amazing from these 5 trades, also again from this area. 2 losses and 5 wins. So now we are still looking for buy. Remember, we still have the target. We are still moving the uptrend. Okay, we have so many different targets. This is the last buying volume. Okay, we have to take it from here so that to know where we are going to be targeting from. These are internal areas to look for. Also, again, if we break above this area, also this will be our field to make profit. So let's see what happened now. Okay, moving up. Now the first close area we are waiting from this one. This candlestick is so long, I'm not gonna be entering with this one because the stop loss will be bigger somehow. Let's see. Okay, now what happened, the market also created another very stronger candlestick that we been looking for, but this one is so long, and then we are still waiting for another opportunity. Okay, we are breaking up. Let's see what happened. Higher low from where? So mark this area. Okay, let's see this higher low. Okay, we started moving up. Okay, let's see what happened. Moving down, make a retracement from here. This candlestick, can we enter from this one? Also so long, the stop loss will be bigger somehow. Moving up, see what happened. Okay, we got this candlestick. Where are we retracing from? We traced from this area. Can we enter from this candlestick? If we enter from this candlestick, we are supposed to put the stop loss below this area. Let's see if we can get more confirmation. We are moving up. Let's see what happened. Okay, down again. So we decided to move down. So that's why you have to follow the rules. This candlestick was not touching from this area. Okay, we are still moving down, ejecting from this area. This one is an equal low. We are going to enter from this candlestick. Let's see the stop loss. Okay, if we start breaking about the body of this candlestick, we are going to be in profit. The target will be, we are scalping this time, but we made a higher high from this area, which means that we created the higher high. We are going to be looking for another higher high. We have a higher low, so which means that this fake out is very important to someone who want to make some big money in the market. So from here, this fake out is a higher high because we broke the previous high. So that's why my target this time is going to be at least from these areas. Let's see what happened. Are we losing this trade or we are going to be winning this trade? Okay, we lost this trade. Okay, market keep moving down. Ejecting from this area. Okay, let's go slow and look for another opportunity. See what happened. Okay, we have this area as a demand zone. We have this candlestick, but we need the candlestick that has this is a loss also. We are waiting for the candlestick that has a long wick on the bottom. Okay, we got it. This is an entry for buy this time. Enter for buy. Okay, my TP is gonna be from our previous area. This one. Some kind of retracement from these areas in general, I will be looking for buy. Let's see what happened. Moving up, waiting for retracement from that area. Can we make it? Okay, moving down. Don't have that candlestick. Up. Okay, let's see what happened. We are in the big profit now. Still moving up. Okay, we got a retracement from this area. I will be looking for this internal area here. This is a retracement from there. Can I enter from this candlestick? Okay, let's enter from this one. Also again, if we start breaking above this area, stop loss is below this area. The target will be this one. Okay, let's see what happened. Okay, we are moving up. Then we go to our target again. So we have one trade win, two trades win from our last three trades. Okay, we are in the very big profit from this area and from this area. Then what are we looking for now? We had the last buying volume. This is another TP we are going to be looking for. Let's see if we can continue moving up. Okay, let's see, can we make a retracement with the... Okay, we are moving down, equal lows. Let's see, from here we are moving up. Okay, higher low. We are waiting for the candlestick that has a long shadow on the bottom. Still ejecting from this area, retracement from here. Let's see what happened. We are moving up. So we broke above this area. Okay, retracement again. Okay, where are we rejecting from? We have also this area. Okay, can we enter from this candlestick? Okay, we are going to be entering from here and see what happened. My job is to enter the market and see what happened. As long as I have seen this before, up movement, I have to trust my experience. Let's see what happened, moving up. So looks like we are going to win also this trade. Okay, we got a winning trade from this area again. So how many trades did we take from this? So we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. Okay, so these are 18 trades. How many losses? 1, 2, 3. Okay, these are 3 losses. 4. 18 trades. 4 losses, 14 wins in this strategy. So this is gold. Remember, if you want to make money in the market every day, just follow this rule that I have been explaining. So the next time we talk about other strategies that you can use and still making money in the market. So if we continue moving up, if you can go back and watch our previous videos from the pre-market analysis and trading ideas, market review, you're gonna find there better analysis that you can follow to make money in the market. So the way we enter the market on gold, this is also another opportunity of one of the strongest strategy in the market. Remember, before you take this strategy to your real account, you have to do the back test. So guys, thank you so much for your time. Subscribe on the channel, support this channel. I will see you next time. Be safe. Welcome to the Trading Focus. Hope everyone is doing great, guys. So in our previous videos, we have been predicting the market. We did different videos about the market review, pre-market analysis, and trading ideas. So from that, that's why I have to today to look for some pairs that we took from our previous trades, even the Trading Empire members group, and even we share them from the community here. And even if you didn't watch those videos, you can go back and watch them so that you can see where to start from and reaching for today's video and see the continuation of the process of being consistency in the market. So that's why I have to recommend that you have to watch those videos. So let's start from the gold. From gold, now taking a look from our previous prediction, we are predicting gold to continue in the uptrend. You remember that we started these predictions from January. Yeah, you can go back and watch them. We are predicting the market from gold, the price to continue moving up, and that's what happened. And even week by week, and even some days in the middle of the week, we are trying to predict the market for what is going to happen, or what we are expecting to happen for the next day after day after day. So that is a good process for someone who to be consistency in the market to watch videos from the Trading Focus here. So gold, that's how gold was predicted from January. Then now, from our previous prediction of the market, we have been moving up. Last week we were from this area, okay? We predicted this, and even from our community group members on WhatsApp, we have been trading from this area. Let's move to the lower time frame. You know, gold, we are in the uptrend continuation. I'm not going to talk about that. You can watch from our previous videos. H1, let's check from there. So we had these areas where we have been breaking some areas and we make a continuation. Okay, you can see these areas or this formation of the market were the same. Formation of the market were the same. We try to fake out that we are moving down. We make some kind of not strong retracement. If you trade gold, you understand. And then we continue up. We break, we continue up. We make a retracement, chart pattern formation. In the trend continuation, we continue up. Even from our last videos or prediction, we have been expecting this and then we continue. We have been expecting this and then we continue. Then now we are making a low. We have made a low. Remember last week, the trading focus members from group WhatsApp, they have been making money from there. So we predicted that the market, we make a retracement from this area. That's what happened. We're expecting from this area and even this one. Okay, so then we started moving up. We made money from our previous week. So from Friday, we had the data was red. That's fundamental. We had the news. And then the market started moving down. Okay, by buying from the lower time frame. These were entries from all different areas we are buying from. These ones, this one, this one, this one. Okay, this one was from this. This one was the up, down. We continue. If we entered from this area, no problem. But the target was from this one, and even breaking above and continuation. So as the market tried or started changing the direction to the downside, remember we had the fundamental. You have to check. We are waiting from this area, okay? We are waiting from this area to make a retracement, then we continue upside. Then the market moved down. If you are in the market from these areas, you had to close from this area and wait for the market to look for another buying opportunities from these areas, like this one, like this one, like these ones, and even down. So the market moved down, then now we are rejecting from this area. What are we expecting from here? So we are expecting the uptrend continuation. From here, you have to be careful with your target. So we are expecting in general the market to continue like this. Maybe we are going to be creating high, higher low, higher high, higher low. Then we continue until we break the previous high. Okay, so from that, buying from this area, you have to wait for the formation of chart patterns, even from lower time frame, like 15 minutes, 30 minutes. Then as we start making maybe double bottom from this area, we start looking for buy from this area as an uptrend. I'm going to show you the target, okay, the entry, at least from these areas, this one, okay. So these are targets. This one, you have to make sure that you have to secure some amount. Okay, you have this, and even the target will be from these areas, from here, at least, or here in general. So this is the target if we buy from there. So what are we expecting from gold if something change from what we're expecting? Also, we can expect the consolidation from these areas, rejecting from here, then we start moving down, and then we continue in the upside. Those are all possibilities. Okay, we beat together day by day by showing what are we expecting from there. Even we can also start rejecting from these areas, and then we start moving down as a deep pullback, so that we can also again wait from these areas. Okay, these areas. But what I'm expecting from gold, I'm waiting for buy from this area, making some few pips as you start the week, and be careful with the risk management. So I'm expecting to buy from this area. If we continue down, I will be waiting from this area again as equal lows from this area, this one and this one. This is a strong. So if we reach from here, we can also again expecting the uptrend continuation. Okay, let's take a look on GU. Okay, but first let's take a look on DXY, dollar index. Dollar index. Remember from our previous videos, dollar index, we're expecting the downtrend or a bearish reversal from this area. Okay, so reversal from this area to the downside, sorry from that. And what happened is what we predicted. Let's first check from where we had it. Okay, let's check from here. Okay, where is DXY? From here, this is DXY. Okay, so we are predicting the market to move down. This was an entry. This was also, we talked about all the entries we're expecting to happen. And then even from here, we took a sell also from this area. And then now the market is moving down. That is the XY. Let's go back on the chart. This is what happened. Okay, let's move to the higher time frame H4. You remember this area. If you don't remember it, you didn't watch our previous videos, you can go back and watch them so that you can know how we predict and where we take our entry from and which confirmation we wait for. So from here now, I'm expecting the market to continue in the downtrend. Okay, we are from these areas, we broke below this choppy. And then what are we expecting? If we are making a lower low, now as you can see, we can make a lower high from this area as we continue downside. That is the first one. Okay, from this area, this one. And even if that not happen, we are expecting also downtrend continuation, and then we start making lower lows and lower high from below this area. So that's what I'm expecting from the XY. Simply, we are targeting this area. This is a reversal to the upside. That's where we are targeting. But remember, you have to secure different profits from these areas. I talked about that from our previous video also. These are all areas we are expecting to be making a retracement and reversing to the upside. So you have to make sure that you understand the market, how moves. Okay, so let's move to GEU. Okay, from what we have, a previous prediction. Remember, from January we have been buying from GU. Okay, if you remember, we're expecting to be reversing from this area. That's why we entered from for buy. Okay, you can see these predictions. We're expecting the market to move up. What happened was as we predicted, that's what happened. Check from GU. Okay, GU from this area. Remember where we rejected from. Okay, let's take a look from there also. Again, this is an area we're expecting to be reversing from. We got a strong indication that there is a bullish reversal from that area. We moved up and down, and then we are still moving up. We are targeting this area. Okay. Then what are we expecting from next week is that this is the last buying area where we can make a retracement and we continue upside. That's what we are expecting. The target is still the same, uptrend continuation. Uptrend continuation. So this is what we are looking for as a bullish continuation from GU. So Euro USD, where we are making summary, like a summary from these pairs, because someone who watched our previous videos, you understand. From someone who didn't, you can go back and watch them. That will make you a consistent trader. You can make money every week, week after week, as you are planning to be a great trader in the market. So Euro USD. Also, we have been expecting an uptrend continuation from this area. We reversed it from this one. We predicted this reversal. Okay, H1. Okay, from H1. We are moving up. We entered from this area. The market moved down again to balance this area. We are still moving up. What are we expecting from next week? Okay, this is an areas to look for as an uptrend continuation. It is another area. Okay, so we are expecting the retracement from this area as an uptrend continuation. Retracement from this area as an uptrend continuation. Okay, that's what we are expecting. So simply, the way we explain this is very easy, and the way you have to take the trade, make it easy. Okay, so that's where we're expecting to be buying from. Let's check also from GBP Japanese yen. Okay, I'm gonna start from the higher time frame. Okay, daily time frame. Okay, first we had this area to be reversing from, because this is a daily time frame, so the market moved down. Remember, we bought from this area. We got some entries from this area by expecting the market to continue and target this area. So we moved even down. Remember, last week I've been predicting the market from reversing from this area and even this one. The reason this area was a rejection from this internal demand zone. So moving to the lower time frame H4. Okay, you can see we took a buy from this area. Okay, and then we are expecting an uptrend continuation. Okay, so what I'm looking for a retracement from this area will be an amazing entry to look for buy. I need the market to break below this area, then I will be buying from this area. Okay, expecting an uptrend continuation. If that not happen, I will be looking to buy above this entire zone, this one. I need the market showing me that we are going to be staying above this area. I will be looking for buy also. And also again, the market from this area, I have to look for a strong confirmation that I'm going to be moving up, because we have the last buying area. This is the last buying strong zone for an uptrend reversal. You can see from the daily time frame, this is a zone that we have. That's also an area I will be waiting from. So remember, this prediction, I keep trying from the middle of the week to come back and make some videos from where the price is and what we are expecting. So from that, thank you so much for your time. Remember to subscribe on the channel, support this channel to grow. We have to stay together. Okay, like the videos and make the comment below, and I will see you next time. Be safe. Buying and selling with the breakout and the retest. What is the perfect way to get better signals? Welcome to the Trading Focus once again. Hope everyone is doing good. In today's video, we are going to explain and showing you how can you get a strong signals from the chart patterns by buying and selling with the breakout and retest. That sounds amazing, guys. Subscribe on the channel, leave the comment below, like the video, and we see you in a minute on our today's video. Okay, breakout and retest. Okay, let's start by knowing what is a breakout and retest. You know, market moves in the form of waves. Let's start from the upside to the downside. We move from the high to the low, where the sellers are dominating the market by making lower low, lower high, lower low, lower high, lower low, lower high, lower low. So now, what is a breakout and retest? This happens when the market is moving. Let's start from the downtrend as I was talking about. Okay, as we are making a low and lower high and even lower low, we are creating some areas of support and resistance. When we are moving down, this is the low, and this low has a retracement from the lower high. So this lower high, that's where the sellers enter for sale. This is a retracement and this is a pullback. So a retracement, that's when the market will pull back and touch to the previous low to create a resistance. So that's where we are going to be entering for sale. So that is a breakout and retest. The market broke below this area and then we make a pullback by retracing from the previous low, which creates the support turn into resistance. That's where the sellers are going to be looking for sell. That is on the side of sellers. So what about the buyers? When the market is moving up by making high highs and higher lows, okay, we are creating the retracement, the pullback. As we are pulling back from the high to low, we are creating retracement to the previous high. This is where the resistance turns into support. And when we are moving in the uptrend, we buy from the support. That's why we say that we buy from the low and sell from the high. That's what we know in the market. As you are buying from the low, this is a retracement from the market when the buyers are moving in the upside. You buy from this area by entering with the confirmation of bullish candlesticks. As the market keep moving up, we make a retracement. So here you are going to be entering also to buy from this area. This is a long position. You buy from this area, even also from this area, you buy when you get a retracement from this area. Buy confirmation, remember, with the bullish candles, okay? When you enter in the market, buy, break out, and retest. What you need to focus on is that this is the rule. Let's say we are moving down, okay, by making lower low and lower high. So on the lower high, that's where we are going to be selling from. How do we enter from there? Okay, this is a support turn into resistance. So if we are going to enter from this area, we are going to be entering from this high, lower high, which is a retracement from this area. I have to look on the candlesticks. I have to look on the candlestick like bearish engulfing, bearish harami, or a shooting star. those are the strongest candlestick that I recommend to use in the market. Okay, you enter for sale from this area, and the stop loss have to be above the previous high. The previous high is the high from retracement. Okay, that's where you set your stop loss by anticipating the market to continue in the downside, even from the areas of reversals where you take a look. For example, let's say from the areas of reversal, let's give an example from bullish reversal. You have a formation of an inverse head and shoulder. We are making high highs and higher lows. This is a formation of a head and shoulder, and this is a neckline. Remember in our previous videos, this is a neckline. From the neckline, that's where we are going to be entering from. We are going to be waiting for a retracement from there so that we can enter also from this area. So that is a retracement. The market will break out of the chart pattern and pull back to make a retracement from the neckline. That's where I'm going to be entering from for buy. Now we are going on the chart and see how can we use this strategy and even what to be careful with when we are trading breakout and retest. Okay, now this is USD Japanese yen. We are looking for buy. We are in the areas of reversal. So this is a bullish reversal. Now also we created a double bottom. So from this double bottom, we created a neckline. What are we going to be waiting for is that the market to make a retracement or pull back to the neckline, and then we can buy from there. We are waiting for this to be, expecting the market to continue in the upside. Let's see if we can get that confirmation to be buying from with the confirmation of retracement, because we broke out from the neckline, so we are waiting for retracement to be entering. Okay, we are now in the areas of retracement. Let's see if we can get a bullish candle, which will be forming like a bullish engulfing or a bullish harami or even a hammer candlestick. Okay, now we got a bullish harami. With this, we are going to be entering from this area, anticipating the price to continue moving up. Taking a long position from this area, my stop loss will be below the previous low. Okay, so how am I going to be targeting by using this strategy? You have to be careful with this strategy. You have to target some small amount. Okay, where am I going to be targeting is from this area, because we are from reversal areas. Also, I will be targeting at least from this area, this one. This is my target. We are from reversal areas, and even as we are going to keep moving up, that's what we are expecting. If we keep moving up, making high highs and high low, if we break above this area and make a retracement, that's where I'm gonna be also locking my profit from. So now let's see what the market is gonna give us from this area. So can we keep moving up? Okay, we are moving up. Okay, consolidation. Remember also, we have a resistance from this area. This is a high. If we make a retracement from this high, like this, we started breaking above it. Breaking above this area, making a retracement from this area, this is also will be an opportunity to be entering for buy. Pushing up. Let's see what happened. Okay, can we pull back? We are still moving up. So now we go to our first target. Also, we have internal areas to be closing some amount if you entered multiple positions. Okay, remember, you have to enter the market by trading only just 1 to 2 trades or 3 if you are in the better position of profit. Okay, so let's see what happened. We are still moving up. We are breaking from this area. Remember, if we break above this area, I will lock some profits. We are still also waiting from this area. Let's keep wait for the retracement from this area if we pull back, or if we break above this one, we are going to be entering from here to be taking a buy. Okay, we decided to pull back. Okay, let's see what happened. Now we are in our area of retracement. So now I'm going to be entering with this confirmation of bullish engulfing. Take a buy from this area. The stop loss is below the previous low. Anticipating the price to continue moving up to this area. This is a TP1. If we break above this area, also again, I'm going to be locking some amount. Let's see what happened with this strategy. Okay, we decided to be moving down. From here, I will close my position before I hit my stop loss. Why? Because from someone who understands how the market move, this will be a demand area where the market can touch from this area and continue moving up. Someone will be waiting from this area. So that's why I have to be careful with the candlesticks. As long as I have this bearish engulfing, I will close my position from this area. This trade was a loss. Let's keep looking for other opportunities to be buying from with a breakout and a retest. We are moving down. Okay, ejecting from that area, equal lows from this area. So this is an equal low. This one will be equal to this one. Let's see what happened now. Okay, we are still moving down, ejecting from that area. Okay, we are still in the market. Can we break out? Remember, we closed some amount from these areas, from even our first target. So we left some amount to run until we get to this target. Let's see if we can continue moving up. So from here, we have this resistance, and that's where we are going to be waiting from also to enter for a retracement to get that opportunity by entering to expect the market to keep moving up. Okay, pulling back. Okay, this was a fake out from this area. This is a fake out. Expecting the market to break out from this area and make a retracement from here to move up. Now, what are we waiting for? Since we got this fake out, we are going to be also waiting from the areas where we've been waiting before from. Okay, this one. This is an area we are going to be expecting the market to make a retracement to enter from for buy. Okay, now let's see if we can keep rejecting from this area, double bottom. Okay, we are moving up. Can we break above? We broke above that area. We are waiting for a retracement, better retracement. We got a retracement. We got now a bullish engulfing candle. We are going to be entering from that area now to expect the market to keep moving up. Stop loss is below the previous low. My first TP will be from this area by anticipating the market to even continue in the upside. Since we are from internal of the trend chart pattern, we are expecting the market to even move up until we get to our target. This is an internal chart pattern, which is a double bottom. So can we keep moving up? Let's see what happens. Still moving up. Also, this is an area to be buying from with a retracement. Let's see what happened. Moving up. Okay, consolidation, retracement. Can we enter from there? Let's wait and see. We are waiting for a better candlestick to be entering from this area. We are waiting for a bullish engulfing, bullish harami, or a hammer. If we don't get a candlestick, we are not going to be entering from there. Okay, let's see what happens. So now, can we enter from this candle? Okay, this candle has a long wick on the top. This is not a better candlestick. Okay, the market keep pushing up. No worry. So now we go to our first target. Let's see if we can keep moving up and get to our target. Okay, so now the market keep pushing up. Make a retracement. This was an entry also from this area. Okay, so now we are so close from there. Let's see what happens. So now we go to our target and the market keep pushing up. This was also a breakout and retest. So we got a retracement from that area and this was a buying opportunity. The retracement was from internal area from this one, okay, from that yellow line. So the market pushed up and we go to our target. So now that's how we use our breakout and retest on the side of buyers. Let's move to the bearish side and see what happened. So now we have this example where the market is moving down. So we didn't retrace from this area, but also we are waiting from a retracement from this area. Okay, let's see if we can get a retracement so that we can enter for sale. Okay, the market is moving up, retracement. We are waiting for the candlestick to confirm that we are moving down. So we got a bearish candle. So here we are going to be entering for sale. Stop loss is above the previous high. What is going to be our target? The target will be from at least from this area. The TP1 is from this area. TP2 from this area. So let's see if we can move down and get to our target. Okay, we are moving down. Now we go to our target. Also from here, we are moving down from areas of reversals. Okay, we are waiting for a retracement from this area, and even this one, we have two areas to be retracing from. So let's see if we can get that retracement so that we can enter for sale. Pushing down, retracement from this area. Okay, now we are waiting for just only a bearish candlestick. Let's see what happened. Okay, we got a bearish candlestick. Now we are going to be entering from this area. So the market moving down until we go to our TP. Even we've been making high highs and high low with different retracement from these areas where we were supposed to be also taking these opportunities. Okay, so guys, thank you so much for today. Until next time, take care and be safe. The trend line. One of the tools many traders use to get strong entries in the market. Welcome to the Trading Focus once again. Hope everyone is doing good. In today's video, we are going to show and explain the perfect way to analyze the market and get strong signal to buy or sell by using just trend lines. That sounds amazing, guys. Subscribe on the channel, like the video, and leave the comment below, and we'll see you in a minute on today's video. Alright traders, welcome back. You heard about the traders talking about the strategy of using trend lines. So trend lines are one of the common tools that we use to analyze the market and even to find some entries and stronger signals to decide if we are going to be buying or sell in the market. Now, what is the trend lines? Trend lines are the lines that are drawn to connect the peaks that are formed by upswings or the trough that are formed by the downswing that will support or helps the trader to identify where the trend is going. Okay, if you get a trend line from the upside to the downside, that is a downtrend. We are connecting. Okay, let's say we are moving from this area, lower low, lower high, to the lower low, to the lower high, to the lower low. We are in the downtrend. Okay, so if we are in the downtrend now, we are breaking the lows by creating the lower lows. From the high to the low, we are connecting the highs, which are the peaks. These ones, that's where we started from. We started from where the trend formed. We created a resistance from this area. We are moving down. So we need to connect the peaks or the highs from where we are selling from is the high, and that is a resistance. Okay, because remember, we talked about support and resistance from our previous video. When we are selling from the high, means that we are entering from resistance. We connect the highs from where we are selling from are connected by a resistance trend line. So this is a resistance trend line because we are connecting the areas of resistance and we are selling from resistance, remember. So from the downtrend, when we are moving to the uptrend, okay, we started from this area, higher highs, higher lows, higher highs, higher lows. We continue with the higher highs. So we started from the low, okay? We started from this area by connecting from the downside, the lows, okay? Those lows, remember, we started changing the direction from the downside. This area is a support and this area is a bullish reversal area. So now as we are moving up, we are connecting from the lows and those lows are support. So this trend line that connects support is called a support trend line. That's from where we are entering for buy from. So that is a support and resistance trend line. Okay, so you need the maximum of 2 picks to draw a downtrend trend line. Okay, you need just 2 highs to connect. If you want to confirm you are in the downtrend, you need to first have the first pick. This is the one, first one. This is the second. Now we are in the downtrend, so you need the maximum just only 2, at least 2 picks to confirm that we are in the downtrend. From the downtrend to the uptrend, to confirm that you are in the uptrend with that trend line, you just need to make sure you can connect the first lows. The first 2 lows, this is a maximum. That's where we are buying from, and this is where we are selling from. So now there is a question. Okay, the question is, what does it mean when the trend line is intersected? What does it mean, for example, in the downtrend? Okay, so we started from this area. We have been moving up, rejected from this area, low, low, lower high, lower low, lower high. Okay, so from this side, we are going to be drawing a trend line. Let's draw a trend line from this area, from the first peak. Okay, then as we are moving down, remember, as we start from the first peak, from the second, that's where we confirm that we are in the downtrend. So now the market price moved up and starting breaking above the trend line. Okay, this is a downtrend trend line, which is a resistance trend line. So if we break above this trend line, we are giving an example from the downtrend trend. So this could mean that the trend has now changed. Okay, that is the first, because we are breaking above the trend line. Remember, when we are moving down and you start moving up and breaking the previous high, means that as long as you break from this area, if you break from this area, means that making higher highs. And when we start higher highs and higher lows, that is a change of the direction of the uptrend. So that's why we have to be careful with this. Maybe is a change of the direction of a trend, or this could mean that this is only a false breakout or a fake out, and the price will soon head back in the original direction. So sometimes the market, let's give another example. We are moving up, okay, started from this area, higher highs, higher lows, higher highs, higher lows. Okay, let's say from this area, let's draw a trend line. Okay, we have the market that is like this. Okay, we have the 2 lows where we confirm from that we are in the uptrend. So we broke below the trend line. If you broke below the trend line, that is a support trend line, that means you have to be careful. Maybe this is a fake out. We are going to be back in the trend and we continue creating high highs and higher lows above the trend line. Okay, so like this. That's why you have to be careful with the breakout or intersected. When the trend line is intersected from any direction of the market, you have to wait and see and look for some signs of the market is going to be changing the direction, or the market is going to make a fake out and continue in the same direction. We are going to take a look on example from the chart and see how can we deal with the trend lines to confirm a stronger areas to buy or sell from. Okay, now let's take an example from the XY dollar index. So let's start from the higher time frame. Okay, so the market is ejecting from this area. As you can see, as we connect this area, this is the high. This is a strong area for the market to be reversing from. Remember our previous video, we talked about the support and resistance, we talked about the zones, and we talked about the areas where there is a high probability for the market to be reversing from. So as we are giving this example from the high, this is a strong area resistance where we are expecting the market to be reversing to the downside. Okay, so now from this, we are going to be taking a look from the lower time frame so that we can see where we are going to be entering from. Because we created two peaks. Let's check. Okay, let's use a line chart. We have this one and this. When we connect them together, we have two peaks from this area. Okay, remember from the second peak, that's where we confirm that we are in the downtrend. Okay, back to the candlesticks. We are connecting this area. Then where are we targeting? We are targeting from these areas. This one, we have this. We have this one. And then the target, since we are going to be reversing to the downtrend, we are expecting a bearish reversal. This is our target from this area. Okay, so this is also possible rejection from this one. That's where we can also take a TP from. So we are going to move to the lower time frames. Then we had a confirmation. We need also to stay below this trend line, resistance trend line, but we have to make sure that if we even break out from this trend line, we are going to make sure that it's not a fake out, or we are going to be changing the direction to another side of an uptrend. Let's find entries so that we can enter from the lower time frame. Remember, we've been analyzing it from the daily time frame. Okay, so we have a confirmation that we can enter from this area. Then let's check on our target. Can we get from this area? Let's check. Well, we can take the target from this area because we have inside strong zone. This is like a fake out. Let's take a TP from this area. Our entry is from this area. We have confirmed that we are in the downtrend. We have the first peak, the second peak from this area. We also had the third because we move to the lower time frame. Let's check from the line chart. Okay, from this. Now it's time to enter for sell. Taking a short from this area. The stop loss is above the previous high. That is our strong zone from the first peak. So the target will be from this area. As we are anticipating the market to move to the downside, we need the market also to stay below the trend line. Okay, remember we talked about that. Let's see what happened. Okay, we broke above as a fake out from this area. You can see we moved up, but we didn't stay above this area. That is a fake out. To know that is a fake out, when we break above, this is a resistance trend line. If we break above, we are going to be looking for that is a higher high. to the higher low from the resistance trend line, which turn into support. And that's where we're going to be confirming that the market is going to be changing the direction to the upside. So that we faked out, but we didn't make a retracement from this area. That's why we are still expecting the market to move down. Still moving down. Let's see what happened. We are still moving down. Looks like we are going to continue by respecting our trend line. Okay, we are still moving down. So let's see. We have this area that we continue to stay below even the second trend line. Okay, let's see what happened. Ejecting from that area. Let's see, we crossed this trend line, but we still have this stronger trend line. So you can see even this is a fake out. We've also got a ejection from this area. Let's talk about this. Okay, so we have the first trend line, which is a very stronger, where we entered from. We have the second trend line that we withdrew from this area, just to confirm that we are going to be staying below this area. But this first trend line is the strong one. This second, we also tried to change the direction to the upside, but we were in the downtrend already. The trend was stronger. That's why the market kept pushing down, even if we tried to break out and make a retracement from the trend line. So that's why you have to be careful with the trend line, as long as we can expect the breakout or a first breakout or a change of the direction of the of the trend. Let's also take a look on the bullish side. Okay, here even also from the higher time frame, we have GBP USD. The market is rejecting from the strong zone from the downside. This is a support zone from where we're expecting the market to be reversing to the upside. So now we are rejecting with the bullish candles. Now we are looking for the price start making higher highs and higher lows, so that we can draw a trend line from this area and start connecting the lows, which have to be at least 2 lows or 2 troughs. Now we are going to move to the lower time frame and see if we can get that confirmation. Okay, here we are from, okay, now from 1 hour time frame, we have 2 lows. We are looking for just 2 touches from the downside. Okay, we got one. So this means that we are going to be entering from this area. We are buying from this area. The stop loss is going to be below the previous first low, anticipating the market at least to reach these areas. Okay, this is our target. And then we need to stay above this trend line. If we break below this trend line, we have to make sure that we are not in the fake out, or there is a sign that the market is going to change the direction to the downtrend. So let's see what happened. Moving up, we are moving. Let's see if we can stay above that area. We are now breaking below the trend line. Okay, from this is the way you have to understand. If we break out from this area, we need to make sure that the market is not going to start making lower lows and lower highs from the trend line. Okay, so that is the first. Secondly, we have to make sure that if we break from this area, if we get just on the candlestick moving and come back, that will be a fake out. Okay, another scenario from this side, from someone who understands the market, this area where we entered from, this is also a strong area. If you can wait and stay in the market and wait from your stop loss, that means you are trusting the what? The trend continuation. Okay, if you doubt about this strategy, all you have to do is to close at least this profit from this area. Okay, from this yellow. Then let's see if this is not a fake out. Moving up, let's see what happened. Rejecting again from that trend line. Let's see what happened. We are moving down. If someone who want to enter for sale will be entering from this area or wait for the high to continue for the low. So I'm going to stay in the trade and see if we are not breaking below at least this area. Okay, let's see what happened. Okay, again, if we move down and start rejecting from this area, I will be looking for another entry as we also draw another trend line. Let's see, moving up as a fake out. Let's see what happened. Okay, we moved down again from this area, rejected from this area, which means that maybe we have the first touch. Okay, we have internal area from this area. And even from here, let's see what happened. Moving up. Okay, we have the double bottom. From this scenario, we have the first. Let's see, we can get another low. We are still consolidating from that area. From where we entered from this low, this one. Okay, we have the first low. Can we start as a new trend? In the trend continuation, moving up. Okay, now we got another low from this area. So I'm also going to be entering for this opportunity, entering for buy from this area. Stop loss is below the previous low. From here, the target is still the same, this area, and then we need to stay above the trend line. Let's now see what happens if we can continue until we get to our target. Okay, moving up, straight move up. Let's see what happens. Can we stay above that trend line? Okay, we are staying above the third touch. Means that we are still expecting the market to continue in the uptrend. Let's see. We have so many targets that we should be securing profit from. As we are moving up, we got a fake out from this area, but we continue moving up until we got to our target. So that was a nice move from GBP USD as we entered from this area. Then we've been patient and wait for the market to even create another support zone in the trend continuation, and that's where we end up get an opportunity of continue buying from this area with the trend line. As a scalper, you should be closing from this area or right away when we have been breaking from this trend line, and then you come back in with the next entry as you enter from this area. So if you should be entering from this area, at that time you change and connect from this downside, or let's say you are in the market, you are not in the market, you will connect these areas, these lows, this one, the first one from this one, this is the second, and this is where you should be entered from. Okay, so now that's how we use trend line in the market. Remember, to use a strategy, you have to backtest before you start using it on your real account. Okay, guy, thank you so much for your time. Until next time, take care and be safe. Buying or sell from the formation of a trend is easier than in the trend continuation. But don't worry, here is the strong confirmation you need to know in the trend continuation. Welcome to the Trading Focus once again. Hope everyone is doing good. In today's video, we are going to show you and explain the strong signal chart pattern to confirm if we are going to be buying and sell in the trend continuation. That sounds amazing, guys. Subscribe on the channel, like the video, and leave the comment below, and we see you in a minute on today's video. Okay, guys, welcome back. So, how to trade a bearish and bullish pennant? First of all, we need to know what the pennant is. A pennant is the continuation chart patterns which is formed when we got a strong move in the market as a trend continuation. So we are in the trend, we are making lower lows and lower highs, so we end up with the formation from those areas of the downtrend. Then after that, we are expecting the market to continue in the same direction. So after a big upward or a downward move, the buyers or sellers will pause to catch the energy or a breeze before we continue the move in the same direction. Okay, so that's where we got the formation of our pennant. So because of this, the price consolidates and forms a 10 symmetrical triangle. Remember when we've been talking about a symmetrical triangle, which is called a pennant. Okay, this is a formation of a pennant. So we have this open from this area where the price started by moving up. Okay, we started losing some momentum inside of a resistance trend line and even a support trend line. So we end up forming a pennant. So from this side, that's where we get a chart pattern that will give us a signal that we are going to be continue in the same direction. So let's move and check from the bearish and even the bullish pennant. While the price is still consolidating, more buyers and sellers usually decide to jump in a strong move, forcing the price to burst out of the pennant formation. That's where we catch an entry to buy or sell with that formation of a pennant. Okay, so let's start from the bearish. Bearish, now we be looking for a continuation to the downside. The price is moving down, as you can see from this area. We are expecting the formation here of the pennants. We got the formation of a pennant. What are we going to be doing? So we need the breakout from this area on the downside. We need the candlestick that will be breaking below the formation of a pennant. That is a bearish pennant. That's why we are going to be taking a sell from the breakout from this area, and the stop loss will be above the formation of a pennant, okay, or a bearish pennant. So let's first take a look on an example from the chart so that we can master this chart pattern better in the bearish continuation. Okay, from this side, we have the market that we are in the trend continuation. A downtrend continuation, we created the lower lows, lower highs, lower lows to the lower highs, lower lows to the lower highs, and then we are now forming a pennants from this area. So what are we expecting? We are expecting the market to be continuing in the downside. So we need the confirmation. The confirmation will come from a breakout of a bearish candle. So waiting from that, let's see what happened. So we got a bearish candle, which means that we are going to be entering from this area. Okay, taking a sell from this area. And the stop loss, remember, our pennant is so small, so the stop loss will be above the formation of our pennant. Okay, so let's check on the target. Where are we targeting now? Okay, my target will be from this area, anticipating the trend continuation. Okay, so let's check from this. This is my target, downtrend continuation. So now let's wait and see what happens if we can get to our target. So now the price moving down. Okay, let's see what happens. Ejecting from that area. Let's see if we can continue and get to our target. So now we go to our target from this area. So this was an amazing move from the trend continuation after the formation of the pennants. Okay, so when you see a pennant in the downtrend, we are expecting the market to be continue in the same direction. We are expecting the downtrend continuation. So moving from bearish, now let's check on the bullish. Okay, now from bullish, that's when the price is moving up, making higher highs, higher lows, higher highs, higher lows. So we end up in the uptrend continuation. We got a formation of a pennant from this area. Okay, so then after that, we are expecting the uptrend continuation if we break out. So what happened? How can you deal with this? After this consolidation, which forms a pennant, you have to wait outside of the formation of pennants from the outside of uptrend. From resistance, that's where we are going to be waiting from. If we break and close out from this formation of a pennants, I'm talking about the bullish candle. If we get a bullish candle that breaks and close above this formation of pennants from the resistance, that's where we are going to be taking a buy from. Remember, the stop loss will be below the formation of a pennant. Okay, so let's take a look on an example. Okay, we have a formation of a pennant from this area. We are in the uptrend continuation. Okay, as you can see from this area, higher highs, higher low to the higher high, higher low. We are expecting to continue with the higher high. So from the higher high, where we are expecting to enter from, we got a formation of a pennant. Okay, so we got also a candlestick that breaks above this formation, and we are expecting the uptrend continuation. So from the upside, I will be entering from this area, expecting uptrend continuation. Okay, my target is from this area. So let's see if we can get there. Moving up, consolidation, continuation. Then we go to our target. Okay, we have a formation of a pennant from this area. This is also a bullish continuation. So we are waiting for the confirmation. We are waiting for the candlestick to break out from this resistance trend line so that we can take a buy from that area, anticipating the continuation of the uptrend. Let's see what happened. Moving up, breaking above this area, which is a resistance trend line. This is the confirmation that we have to enter for buy, taking a buy. From this area, the stop loss is below the previous low. That is a formation of pennant. Okay, our target is from this area. Okay, you can see this was the last buying volume. That's where we are going to be taking our TP from. Okay, let's not see if we can get there. Moving up. Okay, let's see what happened. See, so close to the target, then we go to our target. So now that's how we enter from the bearish and bullish pennants as expecting the trend continuation. If we have a formation of a pennant in the trend continuation, that is the signal that we are going to continue in the same direction. We are going to be taking a buy, and even from the downside, if we get a formation of a bearish pennant, that's where we are going to be expecting the market to continue in the downtrend. Thank you so much for your time. Until next time, take care and be safe. These are the only basic tools to start with by analyzing the market in technical analysis. Welcome to the Trading Focus once again. In today's video, we are going to explain the perfect tools to start with in technical analysis, which will give you the strong signals to buy or sell in the market. That sounds amazing, guys. Subscribe on the channel, like the video, and leave the comment below, and we'll see you in a minute on today's video. Okay, welcome back. So in the market, we have so many different tools to start with by analyzing the market. Knowing how the price moves in the market by using the technical analysis tools to analyze the market that will give you a stronger confirmation to indicate the prediction of the next movement of the market. So those are two tools that we need to start with. Okay, so now remember, in the market, or generally in the financial market, we have to buy and sell in the market. That is one. So let's say we are moving from home, we are heading to the market. Generally in the market, in our daily life, I'm going to buy something from the market. At that point, I'm looking for something that is dropping in the price. Okay, let's say I'm going to be buying like a trouser. So if I'm going to buy with a trouser, I'm going to be looking for the trouser which is in the low price but with the high quality. At that point, I'm going to be buying when the price is low, and I'm going to be selling when the price is high. So you have the shop of trousers. So now you are expecting the customers. When the price goes high, that's when we are going to be making money in the market by selling on the high price. So in the market, we have two tools to use to analyze if we are going to be buying or selling. The first one is the support, and the second is the resistance. So when we are buying from the low, and when we are selling from the high. So the lowest point where the market reaches before reversing or changing the direction to the upside or moving to the buying position, that is a support. That support, imagine like in your house, where we are standing on the floor, that is a support. From resistance, remember, we are buying when the price is dropping and we are selling when the price is high. So from the high, by dropping to the low, we are moving from up to the low. So the highest point, that is a resistance. Resistance is the highest point in the market where the price reaches before changing the direction or reversing to the downside, before deciding to move for selling position. Okay, so in the market, when we are buying from support, and when we are selling from resistance. When we are buying, we are moving up, and when we are selling, we are moving down. Okay, remember and keep this in your mind. We are buying when the price is dropping, and we are selling when the price is high. That is generally the way we use in the market between buyers and sellers. So let's look on how can we use support and resistance, or how can we use the low and the high points to predict the direction of the market, or to sell and buy from there, with the purpose, remember, of making the money in the market consistently. So now we have a support from the low. This is a support, and this is also a low, and this is a resistance, which is a high. So we are buying from the low and we are selling from the high. Okay, when we are moving up and we start losing momentum from the areas of resistance, that's where we are going to be deciding that the market is going to be dropping. The sellers are going to be controlling the market. So from the low, that's why we are getting ready to expect the market to change the direction of the upside. So that's where we are standing to wait for the market. Then we are going to be deciding to buy from this area, anticipating the market to move to the upside. Also, again, the history repeats itself in the market. When we are buying from the low, the target will be the high. When we are selling from the high, the target will be the low. So that is support and resistance. So in the market, remember, we use the candlesticks. Okay, so from where we are standing to move up, that's where we are going to be looking for a bullish candle, and from where we are waiting to sell from, that's where we are going to be waiting for the bearish candles. Okay, here we have a support, okay, from where the bullish candlestick is standing from. When we are moving up, or we are going to decide to enter in the market, remember, we look for the bullish candlesticks. So where the bullish candlestick open from, that is the lowest point. That is a support. That's why support is very important in the market. So from where we are buying from, the market to move in the uptrend, that's where a bullish candles start from, and that is a support. From where we are selling from, we appear the bearish candlesticks, where the bearish candlestick open from the high. From the high, that is the point of resistance. So when we are moving down, we need to see the candlesticks of the bearish candlesticks to move the market downside. And when we are going to be buying, we need a confirmation of a bullish candle to be buying from the low to the high. Okay, so let's say we are in the market now. Let's take a look on the chart. Okay, now from the chart, we have the market that we created as support from this area. So this is the lowest point where we started buying from, or where the bullish or buyers started controlling the market. And even we are now from the high. We are from this area, which is the highest point, which is a resistance. So now we are dropping down, as we can see. As we continue moving down, we are going to be waiting from the lowest point, where there is a high probability for the market to reject from, or for the market to start showing us the signs that we are going to be changing the direction and move on the buying position. Okay, so the buyers were expecting to be controlling the market from this area by moving up to the resistance. So now, let's now see how the market plays this. We are now moving down. So from the downside, we need to start seeing a reaction from this area, this support. Okay, so dropping down. So as you can see from our previous videos, we talked about the candlestick wick. As we are moving down, the candlestick started losing momentum. So you can see this candle, this one is smaller, and even from the downside, we started seeing some kind of rejection from the downside, from the lowest point. That is a support. So we are waiting a reaction from this area, but with the confirmation, we are waiting for the bullish candle. So let's see what happened. Trying to reject from the low. The candlesticks are so small. This is a sign that the sellers are losing energy to control the market. Okay, so now we are still dropping, but finally we got a candlestick then which has a long shadow on the bottom, and that's showing that the buyers are now going to be controlling the market. The sellers try to push the market down with this candlestick, and then we end up pushing up and close bullish. That is the sign that an even is an opportunity for us to look for buying. So we are buying from the low, that is a support. Okay, we are taking a buy from this candle. The stop loss is below the support, is below the low. Okay, so now the target is from our highest point, because we are expecting the market to be rejecting from the high, and that high is a resistance. We have so many different kinds of resistance even inside the market here, so there's a high probability for the market to be rejecting from those area and changing the direction also to the downside, and that's where the sellers are waiting to be driving the market down again. So let's see what happened with this trade if we got the target and taking some profit from this trade. Okay, we moved up and up, rejecting from this area, and then we got to our target. So now you can see the market moved from the low to the high, and the target was from the highest point. That is a resistance. The reason our target is from the resistance, that's where there is a very high probability for the market to drop from, or that's where the sellers are waiting from to be taking the market down. So now let's take a look at an example from the highest point, that is a resistance, where the sellers wait from to take the market down or to control the market by moving down. Remember, the bearish candlesticks will appear from that area. Okay, now we have the market that is trying to move up, but we have also, this is the highest point, which is a very strong point to wait from for this. That's where the sellers are going to be waiting from to take the market down from this area. We are going to be expecting the market to be telling us that the sellers are going to be controlling the market. And even we have the lowest points. We have this one, okay. We have internal area, which is this one. Also, there are also different kinds of small lows. This is a low. That's where we take TPs, different kinds of TPs. This is a support, 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 support. So that's where we are expecting to be taking our TPs, and even the target will be from this area, from where the point or the lowest point will be strong. This one is stronger, and even this one is stronger. So let's take a look and see how the market played, or how the market reacted from this area if we change the direction to the downside. Okay, let's see what happened. Let's wait for the reaction from the upside. We are still moving up. Okay, now we started indicating that the market is going to be dropping to the downside. So we need more confirmation of the bearish candles. Okay, so now as we continue, we got another bearish candle. That's why we are going to be selling from, taking a short from this area. The stop loss is above the previous high, is above this high, and then we are expecting the market to be dropping to the downside. This is our TP, and even from this area, that's where there are possibility to be securing profit from. Okay, so now let's see what happened. Okay, remember, we are selling from the high, and that high is a resistance. So that's where the sellers start from, by dropping the market down. So we are moving down, so grateful, we are still moving down. Then we go to our target. Okay, as you can see from our target from the low, that's where we start seeing the reaction of changing the direction again to the upside. So from the support, and even from this area, that's where we are expecting also the market to be moving to the upside. As you can see, we moved up again. So that's how we use support and resistance, or the highest point and even the lowest point. Okay, from this tools, support and resistance, why do we start from these ones to analyze the market? Because as we use the other tools like trend lines, okay, trend lines, if we are using indicators, that's where we stand from, and even those lowest and high point, we use this support and resistance, and other tools comes after with the purpose of looking for more confirmation. And what I can say in the market, the highest and lowest points, support and resistance, are very stronger than any other tool in the market. So if you want to analyze the market with the technical analysis, this is a subject you need to watch very careful and start using them on your backtest in the market. So you are going to be a better trader if you try to practice these tools. So guys, until next time, remember to subscribe on the channel, like the video, support this channel. Until next time, take care and be safe. Ciao. Welcome to the market review and trading ideas. In today's video, we are going to show you how we took different trades from the previous prediction of the market. Remember our previous videos, we predicted the market from Sunday. So now we are going to show you the entries that we took from there and even what we are looking for tomorrow in the market. So guys, does that sound amazing? Remember to subscribe on the channel, like the video, leave the comment below, and we are coming back straight on today's video on the market review. Okay, welcome back. Welcome to the market review and trading ideas for what we are looking for the next week. Okay, remember guys, you have to watch these videos that are very important. Now, we talked about the pre-market analysis from Sunday. Okay, so now even yesterday the market continued to move, and even I tried to post some analysis from some currency pairs in the community. So now what we are looking for, we need to review of what we predicted from the previous weeks and even from last Sunday, as the market was getting ready to be open on Monday. So yesterday, as I talked about from my previous video, from where I've been saying that as the market is going to be open, you have to be careful. You have to wait until the market is open after a weekend, so and see which reaction is from the market movement, because you expect most of the times the gap from price. So now what happened from DXY, let's start from there, DXY dollar index. The dollar index was from the higher time frame, we're expecting to be reversing to the downside. We are trying to make some retracement. There are some areas we mentioned that where we can take a sell from. Now, remember, let's start from the higher time frame, from the daily time frame, to explain this well. If you are someone who didn't watch our previous videos, you can get an opportunity to know where this comes from, this formation of prediction. So let's start from the higher time frame, daily time frame, and see where the idea of selling this came from. So we had this area, okay, we had this area which is a supply area from this area. So I tried to explain from our previous videos that when the market is moving down, remember we are making low, lower high, low, lower high to the lower low, waiting for the lower high from this area to continue with the lower low. So we waited for so long. After the market tried to make some imbalance areas, creating liquidity from this area, we continued moving down as long as we are waiting for the reversal to the upside. This is where the market ejected from again as a target from the previous strong high, and that's where we are waiting to be selling from. That's why the market, when it started ejecting from this high, we were expecting that the sellers are going to get momentum to take the market down. That's why we had to be careful from this area, and even keep in our mind that this is a reversal area as long as we are from the higher time frame. So this one was an opportunity. We started by making a high to the low, to the high, to the low, to the high. This is an head and shoulder. We went to the low, we had the high, we are waiting from this area. This area is a high and even is a supply zone, and even this is from the neckline. So the market moved up, we gapped up. This is when the market was opening. So the market moved up and rejected from a specified area that we talked about. So then we started rejecting from there with this bearish candlestick. So what we are still focusing on now, we are looking for the bearish reversal from this area. Let's check from the lower time frame and see what we have from there. Moving to H4. Okay, let's check from H4. We have this rejection from this area as we made a high and sweeping liquidity from this area. So now the market is balanced. Now what are we looking for is the downtrend continuation, because you can see the candlesticks are bearish. So how can we continue looking for selling opportunities? This pending order has been activated as we predicted. So now what we are looking for the lower and lower highs. That is the only thing that we wait for when we are moving down. So when we are not in the market, we need to start seeing this market making a lower low by starting breaking these previous lows, so that the market can even make a lower high. Continue with the lower low as we predicted from our previous video. Okay, remember we started from January this year by predicting that the DXY is going to be reversing to the downside if we get those indications from this area. So that we got those indications. Now we are still expecting the market to reverse to the downside, but we have to be careful from this area. We had an entry which has been activated. We are in the profit. We are moving down, and if we are not in the market, we have to be careful with these areas. These are also demand area, but since the market is from the supply stronger zone, remember it's from the higher time frame, we are still defending this. We are still defending the downtrend reversal. Okay, so now this is H4. From H1, what do we have from there? 1 hour time frame. Okay, we are still moving down, but we are trying to reject from this area. That's why we have to be careful with this area. Okay, and even if we stay above this area, what are we going to be looking for is to stay away when we are not in the market, because there are higher probability, or there are possibilities that the market is going to be also reversing from this area, rejecting from this area, moving up, and even we can get an opportunity to start breaking below this area and continue downside. That's what we are waiting for from DXY, to see if we can move up or if we can continue by breaking below these areas and start moving, as well as we are looking to sell from the lower highs. So that is my idea from DXY, as we are targeting from the last lowest points. This one, this is where we are heading. So this is the target. This is the target, and even from the previous strong area where we reversed from by moving in the uptrend. This one, okay, this is where we have to also wait from by taking a TP. So if we start breaking below this area, we have a very high probability to continue moving down. So now moving to let's check from gold. Okay, start from gold here. Okay, I have sent it gold from this morning. We are predicting also uptrend continuation. Let's check from our screenshot. Okay, so these are two areas I was waiting from. Okay, so this is 30-minute time frame. I was expecting the market to reject from this area. If we know how gold move, respect by breaking the high to the low to the high, retracement from the previous high, and then we continue with the high. Sometimes we create some fake out. If you are not familiar with gold, you have to be careful. Now, we are waiting from this area. There are possibilities from gold that we can move down and we end up rejecting from downside. So we start looking for entries from this area. That's why we specify this area. There is a high probability that we can reject from this one so that we can continue uptrend. And even we are waiting from this area. This is a demand area, and even this one is a demand area. Let's check from the chart what happened. Okay, this was a prediction. So we are waiting from 3 areas to buy from. We end up activated from this area. Then someone who entered from the morning, we are in the profit. So check from 30-minute time frame where we. Okay, you can see from 30 minutes, so we moved from the downside. We started making a highs and lows. Let's check from even 15 minutes where we entered from. Okay, 15-minute time frame. So we moved down. We know how the price moved from gold. Okay, you can see the formation of this area moving up at the same point. This area formation of this one is the same formation as this one. The distance is not the same, but the formation of the price action is the same. Okay, even from the downside, we created those areas by moving up. Also these areas, these ones, we move up. Like this, we move up. So that's how gold move. If you are someone who knows how gold move, it's very easy to understand the market. Now, we entered from 15-minute time frame by looking for better confirmation from the candlesticks. Okay, so this is where we started. Making low to the high. Low faking you out. High to the low, entry from this area, continue with the high to the low, entry from this area. Those are 2 areas to enter from. So that's where we took a buy from. Okay, the stop loss have to be below this area by anticipating the market to move up. Even this was an entry, so the stop loss you can set it from this area. So now we are still moving up. So the target, since this is a new highs from the higher time frame, remember, we have to target some few pips as we measure the previous movement. Like, for example, the way we moved from this area by moving up is what we can expect from this, or the way we moved from this area, this one can be the same distance that we are looking for from the upside. So that's why we are still expecting the bullish continuation from gold, as long as we look for better entries from even lower time frame. If you made money from this morning, from our prediction, and even if you are someone who watched our previous videos from Sunday, you are now in the better position. Even from yesterday, the people has been buying from gold. So that is my idea from gold. What are we looking for now? We are looking for the same scenario as what happened today. As long as we are waiting for ADP tomorrow and even an NFP from Friday, we have to be careful with the market. We can expect some choppy from these areas. Maybe the market is going to be trying to continue by consolidating from this area, then we end up continuing the uptrend, or we are going to even move down and come back from these areas and we start looking for uptrend continuation. That's what I'm going to be expecting from gold, as well as long as we are waiting also from NFP can make a change in the market. Okay, so that's what I'm expecting from gold. Even remember these lows, we can even move down from this area so that we can start looking for buy from here by balancing from demand zone, then we expect the market to move up. If you are familiar with gold, this is very simple for you to understand how we are going to be looking for entries for the next day. So moving to another, let's move now on GBP USD. Remember on Sunday, okay? So the market was from this area. Okay, let me show you. We were from this area. We're expecting a move down and wait for the confirmation to enter for buy from this demand area. We had this one, okay, and we even had this from this area. You can see from here, this is also a demand zone. So the market, as I was expecting the gap, and we end up moving from this area. We are still in the 15 minutes. Let's move to H1 1 hour time frame. We moved down, okay. This is generally a high to the low, so now we are going to be continue with the higher high. There's no doubt on that. We predicted GU from January, expecting the market to be reversing to the upside. That's what we are still looking for even today. Starting from the low, we are expecting the target to be from this area. Okay, this is our target. If you need to know more about where we predicted from, you have to go from our previous videos so that you can check where we started from the higher time frame by spotting everything, indicating the price is going to be reversing to the upside. Remember, we started from this low, so we are still in profit and we are still expecting the market to move up. So what am I looking for? Let me say, someone who is not in the market now, what can you do to make money from GU? Okay, we had this area, okay, whether this one or this one, we can move down and end up balancing this area, and then we continue up, and even we can continue from this area where we are standing now by uptrend continuation, moving up and down, and we continue in the uptrend. So from this area, if someone entered from this one, from the lower time frame, we are still expecting the market to continue in the uptrend. If you entered from this area, stay in and hold until we get to our target. But remember, you have to close some profit or secure some profit and leave the runner run without making over trading. Okay, now Euro USD. Checking from Euro USD. Same scenario. Let's see. Okay. So from our previous video, we have been looking to buy from this area. The market moved down as we opened. This is a demand area. We balanced from the low. Okay. So by explaining this, okay, we made a low to the lower high, to the lower low, to the lower high, to the low, to the high. We are waiting for the low to balance this area. We didn't come back to balance that area. So let me zoom in and see everything. You can see from this area we have an head and shoulder. We had two areas to be buying from. This is a demand area, generally from even the neckline. This was an area to balance and buy from. So the market continued moving up, but finally we came back and balanced this area. This is an entry. What you had to do was to just wait for the confirmation from the candlestick rejecting from this area. Then that is an opportunity for you to be entering from the zone where you can hold and make much money from this trade. So we talked all about that from our previous videos. Remember, we started predicting this pairs from January. So if we entered from this area and we continue moving up, we locked some profit, as well as you got another opportunity to be entering for another choice, so that you entered from this area and then we continue moving up. This morning I specified this area as a possibility for a retracement. Okay, we are moving up. Okay, let's say low to the high, to the low, to the high, waiting for the low from this area, whether this one and this one in general. We activated from this one, and this is an entry to buy from. So that's where we entered from this morning. We are in the profit now. If you are someone who had to secure some profit, those are all area to be securing from. We are heading to this area, and even we have internal area to be securing from. So we got also those targets. So there's no doubt that we are making money from these pairs. Okay, moving to GJ. Okay, GBP Japanese yen. Okay, from last week, I'm talking about Sunday. Sunday, that's when we made a pre-market analysis. So we are waiting from some demand areas. Okay, we waited from this area. Remember, I've been saying that I'm expecting the gap down so that we can get a confirmation to buy from. So this area has not been, the price broke this area downside. We made a equal low from this area, from the previous demand equal low. So that's where we started making a high. From this scenario, this is an opportunity for the trader who is not in the trade, who did not enter from this area, or someone who entered from this area and locked some profit. You end up, your break-even has been hit, so then we are no longer in the market. So this is an opportunity for you to buy from the low, where you can make much money from this pair. So now we had two areas to be buying from. These are areas I mentioned in this morning. I posted them in the community. We are waiting for, this was the high, we need the low, the high to the low. So that's where we end up having these two areas, this one and this one. This one got activated, and then we are in the profit. Now we are still moving up, and even this was an entry from the downside, this one. Next, what are we expecting from GJ? Okay, we have this area has been activated, and we know how GJ moves most of the times. There are high probability that we are going to be continue moving up, okay, because this is low to the high to the low to the high to the low to continue with the higher high. Okay, this is a formation that we are expecting from GJ. So this is a formation, and we are on this level. We broke above this area. We are expecting the uptrend continuation from this area, so that we can be making money in the market. If the surprise happen in the market, maybe we can move down and start also from this area by start moving up, reversing to the upside. So those are areas I'm going to be waiting from. So as I can see now, I'm expecting GPY to continue in the upside. Remember, tomorrow we have, let's check from the fundamental. Okay, tomorrow is going to be Wednesday. Okay, no, it will be on Thursday. Saturday, that's when we have the Bank of England monetary policy report, monetary policy summary. We have MPC, official bank rate votes, official bank rate. So on Thursday, we have to be careful with pound, because we're expecting very stronger fundamental from there. So on Friday, remember, we have NFP and even from tomorrow we have ADP. So we have also to keep that in our mind so that we can enter in the market by all the correction of information based on, so that you can take a decision to buy or sell in the market. So guy, thank you so much for your time. Until next time, take care, be safe, and remember to subscribe on the channel. Ciao. Welcome to the Trading Focus Market Review, Pre-Market Analysis and Trading Ideas as a plan of what we are looking for the next week to make money in the market. Okay, guys, that sounds amazing. Remember, subscribe on the channel, like the video, leave the comment below, and we are coming back in just few minutes straight on what we are expecting to be focusing on next week. Okay, welcome back again. Let's get straight to the market and see how we performed from the last week. Okay, let's start from the gold. So this was 27th of January. So I think this was Wednesday. So now the market was from these areas. We're expecting to be buying from this area. Okay, this was what the one. The market was imbalanced. Better area to buy from was this one. So now we are going to take a look on how did we try to enter from this area and took those opportunities from buying. So let's move to the chart and see how we entered from those areas. Okay, now as the market was moving up, so we are looking to buy from this demand area and even from this one downside, which was an amazing area to buy from because this area could be balanced well, so that where did we take a buy from? Let's see what happened. So we moved down. So we started rejecting from this area from our first entry. So now, how did we get an opportunity to buy from this area? Remember, as you are entering from the imbalanced areas, you need to make sure that you have more confirmations so that you have to be starting from the strong area with those more confirmation because the market is imbalanced. So let's see those confirmation. Okay, we moved up, so we started making highs. So we are looking for now the low to be entering by expecting the market to make a higher high. Okay, we moved down again. So this was an amazing idea to start looking for how can we create some kind of a chart pattern from the lower time frame so that we can enter from there as a bullish reversal chart pattern. Okay, we moved down. So the entry was from this area. Okay, we had this area to buy from. So we are looking for the candlestick which is bullish. Now we could be entered from this area. The stop loss is below the previous low, anticipating the market uptrend continuation. So remember, our previous video we talked about the goal that we continue in the uptrend as a new high. Okay, gold was stronger from the last year, and even now we are still looking for buying opportunities. Even from the last week, even from the start of this year, we have been buying gold, and we predicted that from our community and even here on the channel. So now we entered from this area. The target was, remember our previous targets, we've been looking for even breaking above the new highs as an uptrend continuation. Okay, so let's see how we moved up and even taking other opportunities to be buying from up. So this area also were left as a demand zone. This one, waiting from this area so that you can take a buy also from there. Uptrend continuation. So If you want to catch an entry when the market is moving so fast, you can use a buy limit from this area. Okay, the stop loss is still the same from this area. Let minimize as long as we are moving up. Okay, expecting uptrend continuation. Let's see how the market moved from here. Let's see, so we got an entry from this area. Our pending order has been activated, breaking above also again from this area, waiting from this entry to be buying from. If we make a retracement from there, so let's see what happened. No entry from this area. This time let's see, where did we stop from if we go to our target. Remember last Thursday we've been expecting also the market to continue in the upside, so that's where we stopped from as a TP. So we are still expecting the market to move up. That's where we are going to be predicting for the next week uptrend continuation on gold. So now let's look from where are we going to be expecting to buy from. Remember, we are still expecting uptrend continuation. Okay, so now this is H4. We are making a low from this area. This is a demand area. We made a high. Okay, so we have a high to the low. We are expecting to go for the higher high. So now we are from the areas where we can take a buy from, which is a very good opportunity to look for from Monday. Let's see from the lower time frame, what do we have from there? Let's move to the 1 hour time frame and see what is there. Okay, from the lower time frame, that is H1, we are rejecting from this area from someone who trade gold. Now you can see from this area to stand with the fact that gold will continue in the uptrend, you need more confirmation because this area is imbalanced. We should be waiting from the low, at least from this low, okay, by moving down, retracement from this area to balance and sweeping liquidity from here so that we can also expecting the market to continue in the uptrend. Then now, as long as we are staying above from this area, okay, we can't also miss this opportunity, but we have to look for more confirmations. We are going to move to the lower time frame and look on how can we stand from here and buy from this area. Remember, in our previous video, we talked about the imbalance area, the way you trade from that by looking for more confirmation as a new trend. So let me show you from the 30 minutes. Okay, 30 minutes now, we started making high and low. So we are looking for a reversal chart pattern. Remember, reversal chart pattern doesn't mean we appear when the trend is going to change the entire direction of the market, changing the trend. Okay, so even in the trend continuation, we can check from this area. We have this high, we have the low, we have the high. We are creating the low, which we create a reversal chart pattern. This will be a double bottom. So now what I'm waiting for to buy from this area. So I'm looking for high, which we have now, low. Okay, so I'm looking for the high to the low as we're expecting the uptrend continuation. We are buying from this area. So this is an area to look by buying from. So from Monday, I'm looking to buy from that area. I'm looking for just entry. So if we break below, no problem. I'll be waiting from this area. So as an uptrend continuation. So on the other side, let's check from GBP, GPY, GJ. We talked about from also our previous videos from Monday up to Thursday. So let's check also from GJ. Okay, we have this scenario where GJ was moving down, and then what happened? Okay, we are waiting from two areas. We are waiting from this area to buy from, because as you know how the GBP Japanese yen moves, you can understand buying from this area as a neckline. So we are waiting from the low to continue for the higher high. And also we had this area which was a demand zone where we are supposed to be entering from. So let's check from the chart and see what happened and where we are standing right now. Okay, you can see from this area, this is 30 minutes. Okay, remember in our previous video, we talked about that we are in the uptrend continuation. Remember the targets from the daily time frame and even from the weekly time frame where we are heading. So now we had to check from this area. We had this area where we rejected from. We talked about that. So this area is where we rejected from and take an entry from someone who understands how the market move. So now we are in the profit. From here, someone was not in the market, had to wait from this area, and even at the same as from this one. So we moved down from here and then we got an entry from this area. We are now also in the profit. So from someone who is not in the market now, so is waiting to enter from tomorrow, and remember we are targeting these areas, at least this area and even this one. From the higher time frame, you can see we are also heading from this area and even break above that area when you check from the higher time frame. So now someone who is not in the market now, what are you going to be waiting for from tomorrow? So we made a high and a low. We had this area to buy from. As we know how the market opened, we are expecting GJ to gap down. Okay, we can gap down from this area so that we can continue creating new highs. Now, then after that, we should be looking to buy from this area. And even if we continue from where we are currently now, we are going to be looking to buy from above this area. We are going to wait for the high to the higher low so that we can enter from this area. Okay, that's where we are standing from now on GJ. So now let's move to the other pairs that we talked from our previous videos. Okay, let's check now from GBP USD. Okay, last week we were struggling from this area. Remember, I'm not going back to check from the higher time frame. We talked about that. So we know that we are starting from the areas to look for buying opportunity as an uptrend continuation. So we have this imbalance area. We also have this one. We are waiting for opportunities. I would like to see GBP USD moving down from this area so that we can start looking for buy from that area. That's where I'm waiting for an entry. That is the first opportunity. Secondly, if we move down, even from where we started creating high highs and higher low, from the areas of reversal, I will be waiting also from this area. This is an area I will be waiting also from. If we move down until we get to this area, also I'll be still looking for buy as an uptrend continuation. Trend continuation, checking from the target at least of next week. We are looking to target these areas. These are the area I'm looking for. So if we don't break below this area, what I'm going to be looking for, if we stay above this area, you can see from here. Okay, if we stay above this area, I will look for more confirmation as I talked about that in our prediction on gold. So I will love to see if we start making higher high by breaking the previous highs. So if we make a low from some areas like this, I will be still looking for buy from these areas, okay, and even internal areas. So that's where I'm standing from GBP USD. We need to balance an area so that we can still looking for buying opportunity to target this area and even an uptrend continuation. This is 30 minutes. Checking from 1 hour. 1 hour time frame, we are even still have this target. Okay, so that's where we are looking be taking profit from. Okay, we also talked about Euro USD. The same scenario, we are waiting from this area and we have an opportunity to get adjustment from this area. So we are waiting for the low from this area. I will take an entry, no doubt, from here. If we stay above this area also, there's no doubt that I'm going to be waiting for more confirmation by creating a higher high to the higher low, and then I will look to enter from these areas, okay, as an uptrend continuation. So we see how we create the highs and lows from this area, but when we continue moving down and make a retracement from this area, I will no doubt enter for buy from this area. So we are expecting an uptrend continuation. We are targeting this area, and even beyond that, we are looking to target also this area. So this is an uptrend. Okay, DXY dollar index, I'm still waiting from these areas. So this one is the one of them, but I'm not now strongly interested in that. I'm looking for better entry. Remember, this area is a reversal area. You can check from the daily time frame, weekly time frame. We talked about that from our previous video, where the market rejected from. So now, as we are from a reversal area, we are expecting the market to change the direction to the downside. That's why we have this supply zone. This area is imbalanced. We need to balance this area so that we can continue expecting the market to move downtown. So that's why we are waiting from this area. When we get an opportunity to be retracing from this area, that's why we are going to be entering for sell. Enter from this area, anticipating the market to move down, targeting this area, and even downside. Okay, so now that's how we can predict the market from today on what we are expecting to be looking for next week. Okay, we can end the video from here. We are looking forward to be also see the reaction of the market from tomorrow if we can get opportunities. Remember, every day we are going to be looking for market review, even sharing ideas on where the market is and what you are expecting for the next movement of the market. Remember, this will make you a professional trader. As long as you plan for the week, the day, trading will be easy for you because you are going to be looking for where are you improving well and where you are not doing good, so that you can correct those mistakes from there and then move forward and focus on where you are stronger in the position of entering in the market. So that is day by day, week after week, month after month, and even we take you to the year where we are in the profit. Guys, remember, subscribe on the channel and even like the video, support this channel. So until next time, take care and be safe. All right, welcome to the Trading Focus once again. Welcome to the market review, pre-market analysis and trading ideas. So 2025, the year of consistency in the market. Welcome to the Trading Focus once again. Hope everyone is doing good. In today's video, we are going to go through the market from the 1st January this year. By reviewing the market, we are going to show you the entry that you should be taking in the market and consistently making money in the market. That sounds amazing, guys. Subscribe on the channel, leave the comment below, like the video, and I will see you after this intro on today's video. Okay, welcome back. So let's start from gold. From the last year, 2024, gold have been moving up, and even from the 1st January this year, gold was also bullish. Even if we are trying to make some kind of reversal, but we still in the uptrend. So let's start from where and how we analyzed this market. So the way gold was moving up, we're trying to make some correction from some areas as a consolidation, and then we impulse moving up, and then is also the same correction that you are creating from this area with the expectation for the uptrend continuation. So that's what we are expecting from gold, or that's how we analyzed from the 1st of the January 2025 that gold will be expected to be continue in the uptrend. So let's see how we moved in the market and take some trades from the lower time frame where we found entries. Okay, but before we move to the lower time frame, so you can see from this area the candlesticks were bullish. This is the daily time frame. Okay, we are ejecting from this area, this zone, and we stayed above this zone as we are creating bullish candlestick from this area. This is a bullish engulfing. So as we are moving up, we have some areas which are stronger, but now we are focusing on the trend. We have to position in areas to be buying from as a bullish continuation. We are expecting a bullish from this area and continue breaking above this area as we are targeting from these areas, and even the last buying volume from this area, as well as we are expecting the market to continue in the upside. Let's move to the lower time frame, and also let's check first from the area, from the trades that we took from the Trading Focus members group. From here, this was the 13th of January. You can see the market was pulling back from high. We broke above this area and start creating high highs and higher lows and creating a liquidity from this area, equal low from this area. This area was stronger. That's why we have been expecting the market to continue in the upside. As long as we are breaking above the previous high, that is a sign of the uptrend continuation. So we made a higher high to the higher low by expecting the continuation of the higher high. And from this area, that's where we entered from. This is for our time frame. frame. This is a bullish engulfing. The entry was from this area, the stop loss below this area, anticipating the market to continue in the upside. As you can see from this area, we are already entered in profit, and from H1 you can see the market continued moving up. So let's now move to the chart and see how we took those trades till today, and gold now still moving in the uptrend direction. So this is going to be your support for every trader who want to be consistency in the market. Any trade or any opportunity that you are getting from gold, we are going to take it and see if you can lose or consistently make money in the market without taking wrong trades. Okay, now let's start here. As we've been talking about, the market was moving up. We're in the uptrend. We have this demand area. We balanced it. Okay, as you can see, this was a high to the low consolidation. This is a liquidity high to the low, which is an higher low. And then we're expecting the market to make a higher high from this area. So that's why we are targeting this area. That's where we're expecting gold to be continue and take a profit from there. How did we enter from these trades? From this area, we have this area which was balanced also by making higher highs and higher lows. Okay, from here now we have high to the higher low, which means that this area is also balanced. You can say this is a neckline from the double bottom is balanced. We are not in the market. We are looking for opportunities to be entering for buy. So where are we looking to buy from? We are looking to buy from these areas, this one, because this is the last area to make a retracement from high to low to continue for the higher high. And even we have also this area where also we can wait for buy from that area. So this can be also a neckline from internal chart pattern. In general, inverse head and shoulder, this is a neckline, breakout, retest, and continuation. Okay, let's see. But remember, as we are trading, as we are moving with a trend, we have to be careful with our first entry. If you are taking a first trade, you have to make sure that you are entering from the strong areas. From here, the strong area is this one. That's why sometimes you have to wait until the market balance that area. Or if you are going to be entering from this area, make sure that you are risking less than you should be expecting to be risking from this area. So you have to minimize your lot size. Okay, now we can see the area that we are looking to enter for buy from. The target, remember, will be from this area. That's where we are targeting, and we have these are TPs where the market has high probability to be rejecting from. Okay, this is going to be our target because we are expecting the bullish continuation. So this is also an area to be securing from. Okay, even this one and this one. Yeah. So now let's now follow the trend and take some entries. Okay, remember we are waiting from this area and this one. Let's see what happened. Moving up, continuation. We created another area to be buying from, which is not stronger than the previous ones. Let's see what we can decide from that. Okay, continuation. Okay, let's wait from the areas which are very stronger to be buying from. Okay, now let's see what happened. Oh, moving down. Okay, we got a bullish engulfing, sweeping liquidity from this area. Let's take an entry from this area, but remember, can we take an entry from this area and the stop loss will be below this area? And this stop loss will be in risky. Remember, in our previous video, we talked about an imbalanced areas. If we are looking to be entering from this market and hold our trend, looking for a better profit, we need to be stop loss that you are setting is bigger depending on where you entered from. Be confident that the stop loss has to be where it's supposed to be. So if you enter from here, you know that this is an imbalanced area. So the balanced area was from this area, which means that the stop loss will be below this area. So let's see if we can try that and see how bigger is our stop loss. The stop loss should be at least below this area. Okay, let's see the target. Remember our target. This is our target, and this is also an entry if the market move down again, where you can set, okay, let's see, a buying limit. So we entered from this area with a big stop loss because we entered from an imbalanced area. We are expecting the market anytime can balance from this area, where you set a stop loss from this one and you end up losing money. So let's see what you can do for the next movement. We are in profit now. The market still moving up. Now we are moving down. Okay, let's see what happened. Okay, now this is what we've been talking about. If we leave a stop loss from this area will be in danger with our stop loss. So now we have an entry from this area again. This is an opportunity to enter for buying entry. This time the stop loss also is going to be below this area. Let's minimize them a little bit, and the target is still the same from this area. Okay, if we continue upside, we are going to be also showing you all the opportunities from where we can also enter for buy from again. Okay, let's see what happened. Moving up. Okay, let's see what happened. We are still moving up. Consolidation up. Okay, can we see from this area if we can create a high to the low so that we can continue upside? Okay, let's see what happened. Up. Okay, so now we have another opportunity to be buying from these areas. If we get any kind of retracement from this area, we are going to be buying from that. Let's see what happened. Still moving up, we got an opportunity. The market moved down, retracement from this area. This is an entry for buy again. Stop loss is going to be below this area. Okay, anticipating the market to move until we get to our target. We have to look for every entry and see how many of them can we lose and how many of them can we gain from the profit. Okay, let's see. Consolidation. See what happened. Consolidation up. Are we creating some kind of opportunity to be buying from? Let's see what happened. Okay. This is also an entry. Okay. This is a high to the low. Okay. Consolidation from this area. High to the low. We are going to go for the high. That's why we are going to be entering also from this hammer candlestick. Entry from this area. Okay, the stop loss will be below this area, anticipating the uptrend continuation until we get to our TP. Still moving up. This is an opportunity. We can start also minimizing our stop losses, okay, as long as we are moving up. Anytime we can even bring them to break even and start locking some profit as long as we are moving up. Okay, now this is also an opportunity for buy. Created a high to the low from this area. This is an entry also again. Entry for buy. Okay, this is the 1, 2. How many trades do we have? 1, 2, 3, 4. This is the 5th trade that we are taking from this area. This was from this one. The stop loss is below this area. Anticipation of uptrend continuation. So now the market still moving up. Consolidation. Can we create another opportunity to look for buy? Okay, let's see what happened. Market still moving up. These are also areas to buy from. Okay, take the same as this one. See what happened. Okay, we have a bullish engulfing. Entry for buy. The stop loss is below this area. So now as the stop losses have to go break even because we are in profit or this distance. Okay, let's wait and see. Let's leave these ones and see what happened. This is another entry for buy. Let's see if we can continue. Okay, let's see what happened. Uptrend. Up. We are still moving up. This stop loss. Okay, let's see what happened. We balanced also this area. Okay, I think now we are going to continue in the uptrend. Do we have any other entries for buy? Let's see. We have this area was balanced, okay, and another area we have was this one. We have in a rejection with this bearish candlestick with a long shadow on the bottom, which is the sign of bullish continuation. Let's enter from this one and see, can we survive from this trade? We have to make it simple. As long as you practice every day, you see the market every day, everything became easy to make decisions from what you see in the market. Okay, moving up. Let's see what happens. So aggressive. We are losing this trade. It's okay. Let's see what happened. We are still moving down. We have the stop loss from this area. Can we lose also another trade? So we survived from this one, I think. Okay, we started making a high. If we make a low from this area again, we are going to be entering from there. Okay, so now I'm looking for a bullish candlestick so that I can take another opportunity. Okay, I have an amazing hammer from this area. I will enter for buy. The stop loss is below the previous low. Now we are still in better position. Moving up, still moving up. Okay, we are now again. We have another opportunity from these areas. Let's see what happened. Okay, retracement, bullish engulfing. My entry will be from this area. The stop loss is below the previous low. Okay, same as the previous entry. TP from this area. Okay, now let's see. If we are confused from these entries, you have to go back and watch our previous videos, where some videos talking about the how to trade from the balanced areas, how to move with a trend, how to trade with a trend continuation. You have to watch all those videos, and how can you consistently taking trades and still move out of the market with profit. So now you can go back and check those videos so that you can be a professional trader. Okay, we are moving up. Looks like this is a continuation. Okay, so now we are still moving up. We are going to play this one and see what happened, because we are so close to the target. But let also continue looking for other entries, so that anyone who can even think about entering in the middle of a trend, we understand what we are talking about. Okay, so entering from the middle of the trend is also from our previous videos. You can go back and watch them. Okay, moving up, we are making higher highs and higher lows. Where can we buy from this area? Now, this is somehow confusing. We have this area, which was, I think it was balanced. We have this area, which is so aggressive, where the market didn't balance well. Okay, so let's see, can we go back? If we do not make a retracement from that area, we are going to let the market move. Okay, down. Okay, we didn't touch on there well. It means that we can continue. So now we created another inverse head and shoulders inside of a trend. We have this area to balance. That's where we can also buy from. Target still the same. Let's see what happened. Still moving up, which means that now we are no longer looking for other entries. Let's see how the market got to our targets. Moving up straight. So now we go to our target. So that's how we analyzed and took different trades from gold from the downside from the beginning of 2025. So that's how you could be entering from these trades, which was 1, 2, 3, 4, 5, 6, 7, 8, 9. Yes, 9 trades, 1 loss. Okay, and then even we targeted a very strong area where there is a high probability to be rejecting from. Okay, now from gold, we are moving now on GBP USD. Remember, in the previous post from the last week, I posted in the community, so I think everyone who tried to check, who checks it from there, should be made some amount, because as we predicted, that's how the market moved. You have to listen careful from this analysis from GU. So we had the market that was moving down. Okay, so approaching from the previous strong area, you have to be careful with the strong area. That is where your opportunity is from reversing and enter in the market. Then take an opportunity to enter and continue with a trend. Okay, so this is a strong zone. We approached this strong zone and then we started rejecting from this area. What happened before here is what we are expecting from this area. That's why we analyze this market by expecting the market also to be reversing to the upside. So now let's move to the prediction. So you can see here, we're expecting the market to move up. Remember, this is our area we rejected from. Then we are expecting the market to move upside. So all the signs that's showing that the market is going to be reversing to the upside, starting from the strong zone and continue with the current market, where the market starts rejecting from that area with the bullish candle, where now we are talking a bullish reversal. Okay, from GU, this is where we started rejecting from, anticipating the market to reverse to the upside. So let's see what happened. We started creating the bullish candlestick. Here is where you start looking for better entries to buy from. This is a demand area. We are waiting for a retracement from that area. Then you take a buy from there. See what happened. How did we take this opportunity? This is an amazing opportunity. Let's see. Okay, we created a bullish candle. Here we are looking to enter from this area because we are going to be minimizing our stop loss. And even another opportunity, this area is very stronger and we know exactly where we are going to be setting our stop loss. The stop loss have to be below the previous stronger area, which is this zone. We are entering for buy from this area. Stop loss is below the previous area, anticipating the market to continue. At least, let's say, we are expecting the uptrend continuation after a reversal, but let's also say we are targeting from this area, and then we look another entries after if we continue and even beyond. Okay, let's say this area, it's okay, we are going to be making money from there. So now we have first entry. Let's see if we can get another opportunity. Okay, we are still moving up. Where can we buy from again? We are breaking above this area. We got another opportunity. We missed it from this area. This should be an entry also again. Let's see. Let's wait for the next opportunity to buy from. Okay. Let's see what happened. We are still moving up. Okay. We need the market to even move back or continue creating higher highs and higher lows so that you can get another opportunity. Okay, let's see what happened. Now we are moving up. As we are moving up, this is also an entry to look for a retracement from so that we can buy from that. Let's see what happened. Can we make a retracement from there? We got a retracement and then we moved down. This one has failed. We are moving down to make at least an equal low from this area. If we get another opportunity of a bullish candle, we are going to be entering from this area, and that's where I send a post in the community. As long as you see this candlestick, this bearish candlestick, this is your opportunity to minimize your stop loss when we are not already in the market. Okay, so we are taking from this area. We can enter from here, no problem. We can enter from this area. Okay, the stop loss is still below the previous low. Target from this area. The target is even beyond that area. That is like an example that we are taking, but we are expecting the market to continue even beyond. Okay, let's see what happened. Equal low, consolidation. So aggressive, we are moving up. Okay, we have another demand area to buy from. This one. And retracement, we got a retracement. We are going to be entering from this area. We are confident that the market is going to be continue in the upside. Entry, uptrend continuation. The stop loss is below this time from this area. Okay. Uptrend continuation. Still moving up, breaking above that area. Uptrend continuation. We have this area we left as an imbalance. If we make a retracement from there, we are going to be entering from there by anticipating also to target this area. Okay, let's see what happened. Can we move down a little bit? We didn't balance that area. Then now let's expect the market to continue until we go to our target. So these are all the trade that we took from the last week. This is where the market is now. So we are expecting the market to even continue uptrend from this area. What we are going to be focusing on is to make sure that as long as you enter from the areas where you are safe, that's where you are going to be making much money in the market. So guys, there are so many pairs that we have, and even the XY, we didn't talk about it. Even we can talk about that tomorrow. Euro USD, there are also others. We are going to be every week showing you what we are taking in the market every day, so that can give you a confidence that the market is usual, is the business like other business. If we are losing in the market, that is your problem of being excited in the market with expecting being rich overnight. So guys, like the video, subscribe on the channel, leave the comment below, and we see you next time. If you want to trade, or you are trading cryptocurrencies, forex trading, indices, or futures, or any financial market, these candlesticks that we are going to be explaining are the only ones that you need in the market. Welcome to the Trading Focus once again. Hope everyone is doing good. In today's video, we are going to be explaining all the candlestick patterns that you need to confirm that you are going to be entering for buy or sell in the market. That sounds amazing, guys. Subscribe on the channel, leave the comment below, like the video, and I will see you after this intro on today's video. Okay, welcome back. The candlestick patterns are divided into two, a simple patterns and the complex patterns. Okay, so from the simple patterns, this means that the pattern will be formed by one candlestick only. So we are going to be getting one candlestick indicating to buy or sell in the market. Okay, so from the complex patterns are formed, or is the pattern that is formed by two or more candlesticks. You get more candlesticks to give you a signal that we are going to be expecting buying or sell. Entering from that confirmation, we are going to take a look from all different candlestick patterns that indicating buy or sell in the market. Okay, now these are four candlesticks that we have from the simple patterns. Okay, we have a hammer, we have inverted hammer, a shooting star, and a hanging man. Okay, this is a hammer, inverted hammer, which has the bottom, which has the shape. Okay, now let's start from the simple patterns. These are four simple candlestick patterns that we are going to be looking at by indicating buy or sell in the market. So the first one is a hammer. Okay, this one is an inverted hammer, and this one is a shooting star, and we have also a hanging man. Those are four simple candlestick patterns that we are going to be finding in the market. Okay, so what about from the complex patterns? Remember, simple patterns is when the pattern is formed by one candlestick. Okay, from the complex patterns that we are going to be looking for, the candlestick will be formed with two or more candlesticks indicating or signal buy or sell in the market. Okay, from the complex patterns, we have a bullish engulfing. Okay, where we have this candlestick. The first candlestick is a small bearish, and the next candlestick is a big bullish. Okay, so now from this candlestick, this bullish candlestick will be engulfing the bearish candlestick, will be covering the bearish candlestick. I will explain them from the examples. Okay, so we have also a bearish engulfing. This one has the first candlestick will be a small bullish, and the next candle is a big bearish, which is bigger than the previous candle that is covering the bearish candle. And also we have the candlestick here which has a bearish, which is bigger than the bullish. This bullish candlestick with the bearish big candlestick is called harami, which means in the Japanese language means pregnancy. So we are going to explain all of that in a minute. So we also have a bearish harami that has a first big candlestick which is bullish and a small one which is a bearish candlestick. This candlestick is the mother of the bearish candlestick. I'm going to explain that in a minute. Let's move to the examples and even explaining what are these candlesticks indicating from the market. Remember, in the market, we need to predict the direction of the market. If we get a confirmation or a signal, will tell us that we are expecting the market to be taking us from the direction of buyers or sellers. So we will be entering from that by anticipating the direction of the market based on the indication from the candlestick patterns. Okay, now let's start from the simple patterns. Let's start from the bearish direction. So we have a shooting star. A shooting star is a bearish signal. When the market is moving up, okay, we are making higher highs and higher lows. Okay, so from the high, we have the formation of a shooting star. This time, remember, in our previous video, we talked about the selling pressure. So the candlestick left a long shadow on the top. This is the signal that the sellers are going to be expected to be controlling the market. So when you see a shooting star from this area, we are expecting the market to move to the downside. We are expecting to sell from the shooting star. So we are expecting the market to move bearish. So that's where we enter for sell, okay, from this area, anticipating the market to move in the downside. So that's when we get a shooting star as an indication for sell. So now, after a shooting star, we have another which is called a hanging man. This is a hanging man. This is also a signal that we are going to be expecting the market to move in the downside, to move in the bearish direction. Okay, from here, the market also will be moving up. Let's say we are moving up. Okay, so from this area, we have a formation of a hanging man, which indicating that the market is going to be reversing or changing the direction to the downside. We are expecting the market to move down. Okay, we are expecting bearish candles to take our market downtown. So when you see a hanging man, we are going to be expecting the market to move in the downside, or we are going to be entering for sell. Okay, so that's where we enter from these areas, anticipating the market to move in the down direction. Remember, when we are selling, we are moving down. When we are buying, we are moving up. Okay, those are simple patterns from the bearish side or signal that the market is going in the sell direction. Okay, now, after a hanging man and a shooting star, we have the candlesticks here indicating that the market is going to be changing the direction to the upside, or we are expecting the market to move on the side of buyers. Okay, again, now we have a hammer. Okay, this is a hammer. The market will be moving down, and then from the downside, we have a formation of a hammer. We have a hammer from the downside. Remember, in our previous video, we talked about buying pressure. So when the candlestick is losing, when the bullish candlestick is losing a body from the downside, we left with a long shadow or a long wick on the bottom. This means that the market is going to be changing the direction to the upside. Now this time we are expecting to buy from this candlestick. So now this is an indication that the market is going to be changing the direction to the upside. We are taking a buy from the indication of this candle. Enter for buy from this area, anticipating the market to change the direction to the upside. So this is a signal from the hammer. So from a hammer, we have another candlestick which has a small body on the low, which means that the market will be moving down, and from the downside, we will appear the formation of an inverted hammer, where we are going to be expecting the buyers to take the market upside. Or when you see this candlestick, this is a signal that the market is moving in the upside, or the market is going to be changing the direction to the upside. So we enter for buy from this area, enter for buy from this area by anticipating the market to move up. So that's how we get a signal from a simple candlestick patterns by indicating a buy or sell in the market. So we have a hammer. We signal that the market is going to be changing the direction to the upside, and even we have an inverted hammer. We signal that the market is going to be also changing the direction to the upside. We have a shooting star where the market will be moving up. By anticipating the market to change the direction to the downside, we have a signal from a shooting star. Okay, even from a hanging man, we have the formation of the candlestick, and then indicating that the market is going to be changing the direction to the downside, or we are expecting to be selling from that signal. So now let's move to the complex chart patterns, candlestick patterns, to see how are we going to be indicating buy or sell in the market. Okay, now let's start from a bullish side. Okay, we have an engulfing candle. Engulfing candle will appear with the formation of the first candle, which is a bearish, which is small, and even we got a next candle which is bigger than the previous candle, a bearish candle, which means that the bullish candle covered or engulfed the first candle, which is a bearish. So this time the market will be moving down. Okay, so from the downside, now we got a formation of a bullish engulfing, which indicating that the market is going to be changing the direction to the upside. We are expecting the reversal to the upside, which means that we are going to be entering for buy from this area. By anticipating the market to move up, we are expecting more bullish candles to move the market up. Okay, that is a signal from a bullish engulfing. Okay, from the bullish engulfing, we have also a bearish engulfing. So a bearish engulfing will appear when the market is moving up. Okay, we are making high highs and high low. Okay, from the high, we have the formation of the bearish engulfing, where we have covered by a big bullish, which gives a name of bearish engulfing. So now, when we see this candlestick, this is the signal that the market is going to be reversing to the downside. We are expecting to be selling from this area, from this candlestick, with anticipating the market to move downside. So from here, we are expecting the sellers to dominate the market. That's where we got a signal from a bearish engulfing. So after a bearish engulfing and bullish engulfing, we have also a bullish harami. Harami means the pregnancy in the Japanese language. So this time we have a candlestick where the market is moving down. Okay, we are moving down. From the downside, we have a formation of a bullish harami, where the first candlestick is a bearish and the next candlestick is a small bullish, which means that this big candlestick, which is a bearish, is the mother of the next candlestick. we are expecting the market to reverse to the upside. Okay, we have an entry from this area by taking a buy. We are buying from that area, anticipating the market to move up, anticipating the buyers to dominate the market. Okay, now after bullish harami, we have also a bearish harami. Okay, a bearish harami is formed when the market is moving up. Okay, we are making high highs and higher lows. From the high, that's where we get a formation of a bearish harami. So this is an indication that the market will be changing the direction to the downside. We are expecting to be selling from this area. This signal that the market is going down. We enter from this area by anticipating the market to move down. So we are expecting more bearish candles as a seller's domination. Okay, now from the complex candlestick patterns, we have a bullish engulfing, we have bearish engulfing, we have bullish harami, and a bearish harami. So from this candlestick, those are the stronger candlesticks to be indicating if we are going to be buying or sell in the market. So there are also different candlesticks apart from these ones, but these are the stronger candlesticks that we can use in the market and are easily visible in the market. So from this simple candlestick and complex candlestick patterns is where we are going to be predicting or entering from to take a buy or sell in the market. So guys, remember, before you start using all these candlesticks, you have to backtest the market before you apply them on the real account. Okay guys, again, thank you so much for your time. Remember, subscribe on the channel, leave the comment below and like the video. I will see you next time. Be safe. The stronger confirmation we get from buying or sell in the market is from the candlesticks. We have two candlesticks to buy or sell in the market. After that confirmation, that's why we are going to be making money in the market with the confirmation from the candlesticks. How is a bullish and bearish candlestick is formed, which confirms that we are going to enter to buy or sell in the market. That sounds amazing, guys. Subscribe on the channel, like the video, leave the comment below, and we'll see you soon in a minute on today's video. Okay, welcome back. So in the market, we have to make two decisions, buy or sell. Okay, so those are two decisions we have to make in the market. When we are going in the market in our daily life, we are going to find that the sellers and even the buyers, someone will come by decision of buying, and we're gonna find there some who are selling the products. Okay, so now here also in the market we are buying and sell. Okay, so we have two candlesticks that represent buy and sell. So when you see these candlesticks, you are going to be identifying between buying or sell. Indication from those candlesticks will show you the decision we are going to be making in the market between buy or sell. So let's start from the first candlestick. The first candlestick will be bullish candlestick. A bullish candlestick represent or give us an information to traders to buy the market. Okay, so this is a bullish candle, which is green. So this represents buy. This candlestick opened from the low and closed from the high. Okay, which means that this candlestick opened from this area and then we end up moving up. So we have an open, we have a low from this shadow, from this low shadow. This is a low. This is a close. We close from this area. And this is a high from this from this upper shadow. This shadow is also called a wick, which means that the buyers start from the low. We opened from this area. We first made a low, this low from that wick, before we were moving like bearish. So from this side, we started opening by moving up, 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 up. Then we end up closing from this area. This is a close from this body, and then this is a high from when we try to move up, we end up rejecting from this area and closed from this area. So this is a shadow or a wick where we closed from the high, and this is a low. So the buyers come from the low to the high. When we are going to buy in the market, which means that we are coming from the low, we are buying from the low to the high, the market will be moving up. So that's why when we are talking buying, we are talking about moving up or moving bullish. So this is a body of the candlestick. So this is a bullish candlestick. When you see this bullish candlestick indicating that we are going to be entering for buy, or we are going to be getting ready to enter for buy. After bullish candlestick, also we have a bearish candlestick. This represents the sellers, which means that the market will be moving on the side of sellers. How is this candlestick formed? This candlestick this time, from the bullish candle, we are opening from the low to the high. And this time, we are opening from the high. This is an open. So, which means that when we are selling, we are moving from the high to the low. Okay? This is a high. We are moving from high. This is a high from this wick or shadow, upper shadow. So, which means that the candlestick made this high before we start opening for a low. Then the candlestick start moving low, low, low. Then we made this low from this wick. Then we rejected a little bit from this area. Then we closed from this area. That's how the bearish candle opened. When you see a bearish candle, means that we are going to be entering for sale, moving from the high to the low. Okay, so this is a low shadow, which means this is also a wick, and this is a body of the candle. This is a bearish candle. We see this candlestick. This is an indication that we are going to be entering for sale in the market. Okay, taking an example from the bullish, okay, we have this candlestick which are green, which means that the market is moving up, as you can see. So the buyers are dominating the market, which means that we are in the buying position. The market is moving up and the buyers are dominating the market. Should be entering from these areas, anticipating the buyers continue moving up. So if you decide to buy from this green candlestick, bullish candlestick, you are going to be in the profit on the side of buyers. Okay, so you can see the market continue moving up by presented by those candlesticks which are green, which means that we are in the buying position. So you can see we open from the low and we move up. Okay, from the bearish side or sellers, the market is indicating that we are moving down with this bearish candlestick. So if we are in the market now, we will be looking for selling opportunities by anticipating the market to move in the selling position, moving bearish. Okay, so now the candlestick are presenting the sellers are dominating the market by moving down. That's how the sellers are presented by the bearish candles, which most of the times are red candles. You can even change the color of these candles. Okay, this is what you have to be careful with about. And also, every candlestick represents a time frame. If we are in the 1 hour time frame, every candlestick will be open and close in the 1 hour time frame. When we move to the 4 hour time frame, which means the candlestick will be representing the 4 hour time frame. The candlestick will be opening and close after 4 hours. So guys, that's how we get an indication of buying or selling in the market by using these two candlesticks, bearish and bullish candlesticks. So thank you so much for your time. Remember to subscribe on the channel, like the video, and we see you next time. Be safe. Forex trading, cryptocurrencies, stock, indices, option, and others. Welcome to the Trading Focus once again. Hope everyone is doing good. In today's video, we are explaining the difference between the Forex trading and other financial markets. Why learning Forex trading and getting skills from Forex trading is an opportunity to even trade other financial market. That sounds amazing, guys. Subscribe on the channel, like the video, leave the comment below, and we see you soon in a minute on today's video. Okay, now let's start with the most popular in the world financial market. Okay, so this is a Forex trading online. A Forex is an exchange of the currency to another. This takes place by one currency exchanging with another. Let's take, for example,